Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over options data, like the tickers in this list. So before I go over the tickers here, I'm just going to do a brief little introduction, and then I'm going to dive a little deeper than I normally do into some of the options contracts, just for my learning and hopefully for you guys to learn along with me. And so, with that being said, just going down the list over here, I just want to let everybody know this is effectively just a trading journal for me. So it is for my learning process. I'm just documenting it and sharing it so we can all learn together, and that this is for educational purposes only, just for fun, looking at charts. And none of this is financial advice. So, do take everything that I say here with a grain of salt, really just having fun. And I should note that some, if not most, of the trades that I go over in this will be bad. Thus far, none of them have been bad or, not really bad. But plenty of them could be expiring worthless, as most, if not all, contracts will go to zero prior to or leading up to their expiration, on the dates here. So do take that into consideration. And most of the contracts here are expiring, months into the future, if not more than a year into the future, just because, I like to take my time with them. And part of the reason for that is because plans do change. Things can be pretty unpredictable. And so between now and the next time that I do one of these videos, next Saturday, the numbers that I talk about, those are going to change. Some of the levels that I talk about, some of those might change as well. And of course, because this is a spreadsheet that, I manually update, there could be some typos. So it's quite possible that some of the numbers that I do put up here are wrong. I suspect most, like 99.5% of them, are going to be correct. But, I'm human. I do make mistakes, but I will be referring to some of the information on the Unusual Whales website, as well as looking at the charts and just evaluating them. So I do think that, there's a lot of good information here. And if you don't have Unusual Whales, a lot of this information you can actually get from like their free open version of their website, but it really only goes back 5 days. And what I like to look at is data going back at least a month in time. But I did build this spreadsheet initially using their free data. So, I would recommend, if you wanted to get into Unusual Whales, try it out for a month using their free, version that they have open to everybody. Get more familiar with stuff, whether that's following some of the stuff that I do or taking similar approaches to your favorite tickers, or just exploring what they do have there. And then after that, maybe getting a monthly or annual subscription. I now have the annual subscription, and so far I'm enjoying it. I think it's a great tool to be using. And I also want to note that there are timestamps to all of the tickers that I will be going over, so you can skip to your favorite ones. But I would recommend just, watching the whole thing, just be on the journey with me, grab a beverage of your choice so we can have some fun together. I just got some water here, make sure I stay hydrated. But yeah, before I get into the tickers, I wanted to do a couple highlights from the list here before I get into them individually. I did just kind of want to go over my thesis here, and that is effectively, that I am not here to fall in love. I am not here to be jealous or to have FOMO, and I am not here to be greedy. And so I kind of set up this table for, the contracts that I do hold, that if I hold one contract, ideally I will sell at 80% profit. But if I get another contract, and I do buy them individually, so it's kind of boring, but it's less boring than doing paper trading. I'm actually trading contracts here, but I am easing into them, as I have been wrong about bottoms, and so this is kind of my way to buffer for that. If I get two contracts, I would then trim one at 20%, the other at 80%. I get three, do that, but then also at 100%. And then going beyond that, I would trim at 10% and then 0% or break even. just to be lowering the risk in case there are some more dip buying opportunities. And then beyond that, I would then be trimming in 100% increments going beyond that 100%. So ideally, some of these will be, 10 baggers or 10 Xers, this going up to 1,000%. But I don't expect that for all of them. I expect that to take some time with some wiggles along the way. So I allow myself to trim on the way up and to buy back on dips. And so part of the reason why I do have this plan here is because I want to end every week with less than or no more than 20 positions, which also includes some share positions that I have. And so, I try to do that every week. This week, I did end the week with 20 positions. I did had to cut one that I liked, but, I really, want to be following these rules here. And then another thing that I kind of started to think about over the past week is that if I do take profits, on the way up here, and then it pulls back down to, be below my average, and I start to buy back, getting my average down, buying back below my average, then what I think I should be doing is then kind of repeating this process. If I then have gotten my average down and have, 5 contracts, I should then, or 5 or more, I should say, then I should be trimming at break even 10%, 20, and upwards, just kind of repeating that process because, like I said, most, if not all of these will be going to zero. So that's just kind of a way for me to manage my risk. And then so looking at this table, there were a few contracts that really, and not even contracts that are up here, but tickers. There will be other contracts that I will explore on unusual whales here. But there was some data over the past week that really stood out to me as just being like really, really exciting, very clearly bullish moves being made, unusual whale activity being conducted. And so I'm going to dive into a little bit of that and then also go over some of the tickers that don't really have that much volume or premium traded on them, not that much activity. And so I actually think that those, might be the ones that are the losers up here because there isn't, the big money or bigger money than me at least behind these trades. And so I think that those might be duds. And so I'm going to try and shift some of my focus to some of the contracts that seem like real winners to me. And so the 3 tickers that are on this list that stood out to me as having a really bullish activity last week, one of them was Celsius, ticker CELH. It wasn't necessarily this contract here, so I will be exploring another one, which I believe, so this is the one that I have here. I will be exploring another one, but just in unusual whales, also getting more familiar, more comfortable with just talking about the data straight from there, and then relating it to what I talk about in these spreadsheets. Another ticker that stood out, I did put a video out on it, so I bet you guys are not surprised. That would be NEO. And then another one, which is hiding behind Ed's head, is RIVN. Some pretty exciting options activity there. So I am, going to try and position myself for the next week so that I can either be adding to the NEO positions that I do hold. One of them I did add, as you can see the crayon there, which means I did begin tracking it over the past week. So those are 2 contracts I hope to add to over the next week. But I also would really like to reestablish a position with RIVN as far as contracts go. I do have some shares, but it would be nice to start to get this contract back. I don't necessarily regret selling it to take profit because, no one ever went broke taking profit. But I just think that the data supports that it will be going higher, which I had seen in stocks like Unity, which I got out of too early. But, that's just the name of the game. And then, the other one being Celsius. This one and RIVN, I would definitely like to be getting positions in them. But for now, I am really, just watching them. And so, I will be diving into that. And also, I guess I should note the key, if you guys weren't aware of that. If there's the money bag, that means I made money. Lost money is a crying cat. Not lost money on any of these, or not net lost money, but some of the break evens because of fees, I do end up losing, a little bit of change, not a big deal. And then you can see the ones that I am holding with the hands emoji, ones that I'm watching, and ones that I'm done tracking tracking. The only ones that I'm done tracking or may not be tracking next week, I just wanted to have that noted. That is going to be Marathon Digital, or ticker symbol MARA, or Unity Software, just because, I'm not holding those. So if this list does get to be a little too cluttered, like if it does extend all the way to the bottom here, then I'm going to probably cut those, but I will be tracking the other ones. And so, with that being said, for the highly regarded option theses, week 7, let's dive into it, with the first one being AMC. And so here we're looking at the AMC $8 call that expires June 20th of 2025. And so this is one that I do hold a small position in, and I was actually asked a question about this in the AMC video. So I just kind of wanted to, I guess, be a little bit clearer, maybe with, the positions here that I have. All of them are very small. I do one contract at a time for this position that you can see here in red there. And so I did trim some of my position, but that was more than, it wasn't last week, it was the week before. I trimmed one contract. And then about a month ago, I trimmed another contract. And so I had taken about 30% profit, which was about a profit of $15.41. And then I also trimmed for 80% profit, which after fees and everything was $42.42. And so I still do have 3 more contracts, which I intend to trim at profits of 100%, 200%, and 300%. But this might be, a scenario where, things change as price has come down to, or the premium has come down to very close to my average position. So the low on Friday, so December 13th, for this contract was 55 cents. Also on Wednesday, the low is 55 cents. And so my average is 53 cents. And I actually believe that if I were to sell one of my contracts, it would not get filled at 53 cents. I think it would get filled at about 50 cents. So, I'm not looking to sell for break even or anything. I am just looking to hang on to these contracts, because I do think that price will be going up to around $8 a share, I would say, before June 20th. But since we did have, this move up in the stock price here, the underlying price, this is the closing price each day in green, we saw price go up. I think it hit a high of $5.56, if I'm remembering that right. But then there was an announcement of dilution. And so then the price pulled back, and we are seeing premium price, or the average premium traded for the day, pulling back as well. And so I do feel like we could be in kind of like, pullback scenario with AMC. It needs to find its footing before it starts going up again. And so I'm probably not going to be too aggressive with adding to my position for this one this week, largely just being because I put a lot of focus into NEO last week. And so, I'm kind of not putting all of my eggs in one basket, but I'm putting a lot of my eggs in that basket. I have a lot of confidence in it because of the data that I will go over from Unusual Whales. So, I just have a lot of confidence in that, given that there are signs suggesting, unusual activity, where there isn't really anything with AMC just yet. I suspect we will be seeing something maybe in the next month or so, but not before we actually find a bottom. So, I had this as green, that I had an order placed to buy another contract at 50 cents, translates to $50 because it's 100 shares represented by one contract. So 100 times 50 cents equals $50. And so I actually adjusted this one to yellow, meaning I'm just keeping my eye on it. I don't have an order placed, but if I do see that, like on Monday and Tuesday, I happen to be working next week. If I see, when I go over this spreadsheet after work, if I see that, the low was 50 cents or lower than 50 cents, maybe this is a contract that I do want to pick up. But maybe it just goes down to 50 and then bounces. Maybe I'm fine with just the 3 contracts for this one for the time being. So some of the data here for AMC that stands out to me, I go over this every week, but really just the volume here in blue, we see this big spike up here, and that corresponds with this spike in total premium in blue over here, where the premium exchanged on that day or traded on that day was around $60,000. And so that to me is not super unusual. It's not a crazy amount of money. And that could just be because this contract expires months into the future. And so maybe it's just not that exciting. Also, though, with that spike in volume, we actually saw a pullback in the open interest. So the number of contracts being held actually decreased following that. There was net selling of this contract on that day. And so, yeah, I mean, there's just nothing that really pops out to me about this one being like I need to be snatching up and building up more of a position around 50 cents. I think this could be coming down to what was the low over here on this day. It looks like the average low was 49 cents, so just below 50. So, maybe we could be retesting that. And that was actually, let's see, what date was that? The 11th, November 8th. And so if I scroll down here to that premium for November 8th, the low was 48 cents. And I guess the day before that, the low was 44. You just see that average value there, 49 cents reflected into the chart here. But yeah, I mean, I could see it coming down to like the mid 40s. And so if I see that, I'd like to see it really like bounce from that to suggest that a bottom's in, like we've seen these bounces here in the past in that premium. We haven't seen that yet. It's still in this downtrend, so I am not going to be too hasty with this and jump into the position. And I think that is supported by the unusual whales data. But before I go into that, I will look at the chart here just so we can see. I talked about this in the video from yesterday, that we did hit all of these levels that I had kind of talked about. The next one on the list is $4.10. And that, is corresponding with a prior low. I believe that was the low from May 31st, if my memory serves me well. And so, yeah, I mean, I think that we could be testing that. So I think this could be coming down just a little bit more before it bounces, and if it even does bounce. And so, I just want to be patient for that. One thing that I could do, I did not do in the video, is just draw a Fibonacci retracement from this low of 403, then going up to the high here of 556, just to get an idea of some levels that, maybe we could be finding some support at. So just making sure that those levels are correct there, 403 and 556. Going over here to get the Fibonacci levels of most interest. And so I imagine this is probably already broken below the 786, yet well below the 786, which was at a price of $4.36, right around there. And so, we've gotten really 3 closes below that level. So I don't really think that's too significant. I just really like to be seeing higher lows be put in, or if we do, sweep the lows of 403, I'd like to see closes below 403. And by sweep the lows, I mean go lower than 403. I'd like to see that be bought up. I'd like to see a bounce following that if that does get hit, and then I might be more, aggressive with, accumulating the call options. And so now I'm just going to flip over to unusual whales so we can look at the data for this contract, the AMC $8 strike call that does expire on June 20th. And so this is going over the last 30 days. I just like to look at it like that to get the bigger picture. And from that, we can see each candle here representing 1 day. So we did have a pretty big spike back here, but we haven't really seen too much activity with this contract. And so if we want to just consider AMC contracts generally, that is what we would look at over here. That is the net premium exchange. And so for this 1 day that I have here, we can see that call premium has been going up as price has resided down. And, so that does suggest that this is good, that call premium is going up. People are betting on this dip being, near a bottom and it going higher. We also see a sell-off in the red. That is the net put premium. So that is negative. That suggests people are selling puts, buying calls. So that is what we want to see. But if we do flip this over to the 30-day chart, just like this one, we actually don't see too elevated call or put activity relative to what we've seen in the past as price is dipping down here, which is in yellow. That makes me think that the bottom is not in just yet. So I think that, 50 cents, I think that will be hit for this contract. But, if not, I just don't want to be pouncing on it because, I think that it could be going lower. And so here what we could see in the data, this is really, just what I extract from here and put into the spreadsheet. So we can see the volume, open interest. I talk about those. Also the lows and high for the premium and the average I have up on the chart. Also implied volatility and total premium. So don't really need to go over that for this. But one thing that I think is useful that I recognize over the past week I should be doing for all of these tickers that I cover is not just look at the contracts that I am specifically interested in, but also go up here and type in AMC to look up all of the contracts. And so this is going over open interest and contract lookup, which you can get to by going to this little wave icon for options data and contract lookup. So that's where I am at. And Unusual Whales. And you can do this on their website without having a subscription. You just won't have all of the contracts. You'll just have the ones with the most volume traded, I believe, and only going back the past 5 days. So it's very limited. So as far as learning goes, I think the free version is fine. But once actually getting into using this data to be making decisions, I think it is worth the monthly and or annual subscription fee. And so that's what I'm doing. But you can also just kind of be learning with me as I do this with these weekly videos, getting more familiar with it. So I think that is kind of helpful by itself. But so for me, what I have been doing over the past week is I haven't been just looking at these based on the highest volume, because maybe there are some contracts that are super cheap. Maybe they're like 5 cents per contract. And so there's tons and tons of volume on those contracts, but it's like only $10,000, which is equivalent to one YOLO as far as Wall Street Bets defines it. So that's like one DGen YOLOing $10,000 on one of these contracts. That is not an unusual whale. That is a manatee munching on seagrass, not a blue whale scooping up all those plankton, And so that's what I want to be following. I want to be following the biggest mammal on the planet. And so that is going to be not by volume, but by premium. So I just go over here to filter them by the most premium. And what we can see for AMC, the ones with the most premium traded over here, you can see over 150,000, right around 150,000. This one right around 100,000. These two were puts. And that doesn't necessarily mean that they were selling them or buying them. So whether they're going long or short, that is something that one needs to consider when looking at this, the data the following day. I would imagine that there was probably a lot of buyers of these puts, considering that it did close below $5. So that would make sense. The next one down here is $4.50. But, for me, I don't really like the numbers here in the premium, especially with a stock like AMC that's very heavy with retail trading. It doesn't really stand out to me until it starts to get to like $250,000, or I start thinking about the amount of premium traded denominated in millions of dollars. So $250,000, $250,000. That would be the first one that would stand out to me. So here doesn't really stand out as being that crazy or that impressive. Also with these being puts, that doesn't give me too much confidence. And so with this, the 13th being behind us, as it is the 14th, I'm recording this on Saturday, I'm actually just going to click on this one just so we can see the data for it. And let's see. If I should add to, yep, I guess I added to down here. It's behind Ed. So if I just click on that, we can see that, there was some selling of this on Thursday, suggesting that, whoever's selling 1,000 contracts here represented by $74,000, they're kind of betting that price might be above $5 a share by the 20th. We saw more selling on Friday, but overall, there's just been a good amount of buying, net buying over the past couple weeks. So, that is, kind of a bearish sentiment there. But now I will switch over to, I need to sort these by A to Z. And so I'll just keep them like that. And so the next one that I will go over is the AMC, let's see, the other AMC call, which is the $20 strike, and that one expires January 16th of 2026. So this is a leap, more than a year out before it expires. And so this one, I do have a buy on it at 35 cents. I previously had one contract of these at 35 cents, but I didn't aggressively buy. If we scroll back here, that initial buy was at 35 cents on November 4th. I did have more opportunities to, buy the dip over that week and, really the week following that purchase. But I didn't get more. I didn't get my average down a little bit. And so I just held that one. And then we saw, this big move up in the price. And so I thought, well, if it's going to squeeze or something, or maybe it's going to pull back, whatever, I don't know what's going to happen. I should at least take some profit. And so I did take some profit at 80%. That was kind of, my plan based on that outline, the thesis that I have in that table. But then I started to think, well, maybe this is not going to pull back. Maybe this is going to squeeze. And so the following day, I did buy back one contract at 55 cents, just thinking that I only had one contract before. It's very boring. And I only made like $30, less than $30 on it. So I figure, I take this profit, subtract it from this, and now my average is, effectively less than 35 cents. With that one, I bought another contract at 40 cents, and then I will buy another one at 35 cents. If it does get hit, we hit a low on Friday of 39 cents. And back here when this order was filled, we hit a low of 35 cents. So, just to get one more contract there, just to be building that up. Because I only have two here that I'm holding, whereas with the other AMC contract, I do have three. So just, to kind of even that out, keep that balanced. But, there is also, not a ton of stuff really standing out to me. There's actually something peculiar here with the open interest, so I'll have to look at that. Maybe there is a typo here, so we'll have to see. Let's see. No, but I should be able to check this with unusual whales data. And so what we have here is the underlying stock in green there, and that looks flat effectively just because I adjusted the y-axis to include 20, so that strike up there. And what we can see in the premium is that we did go up a little bit, but then we have pulled back. And so now I'm just trying to reaccumulate some contracts as it dips. We did back here see a spike in volume that represented about $800,000 in premium. So that is, something that gets my attention. It's more than, or approximately, more than $250,000 or $250,000. This is, getting close to $1 million. And so that stands out to me as being unusual. And following that, it does look like, we've had kind of a wonky open interest, but we have to factor in the y-axis scale going from $105,200 or open interest contracts to $106,100. So there's really like a narrow range there. So this is just kind of flat, which you can think of looking similar to, the implied volatility here where it has maintained elevated. Following that spike, but it has come down just a tiny bit, but not a huge amount. And we did see the spike in open interest, but again, it's not a huge amount. So that actually does seem to not be so abnormal as I was initially thinking. That's just because the y-axis here, have to consider that. And so 212, that is the difference in the amount of contracts that were being held between Thursday and Friday. So an increase in open interest, 212. And so if I do flip over to unusual whales, we should be able to see that spike right here, the difference between the open interest from the day before and Friday. That was an increase of 212 contracts. And what we see over the course of the past month here is, I don't really see anything that stands out recently. We have had some pretty big spikes in the past. But for me, this is one that, I would add another contract at 35 cents, but after that kind of evaluate, maybe get another one at 30. But I just have the one order placed for one more contract there. And this again, more than a year for expiration. Do I think AMC will be at $20 a share on January 16th of 2026? In all honesty, probably not. But do I think we could get a move up to $20 a share and then maybe pull back to $10 or $12 a share? Yeah, I think that is pretty feasible looking at the chart and stuff. I have talked about that in the past, and so that's kind of what this thesis is based around. Really, I think that price could be getting back to $8 a share with this contract, and I think it could maintain its price up there, but I don't know, again, around June 20th, who knows? No dates for these, but that's just kind of like the window that I'm working with. And so I think that price could be moving towards, if not to, $8 a share before June 20th. And I think it could be moving to, if not towards, $20 a share before January 16th. So that's kind of my thesis with AMC. And then so another one that I've been, I would say, a little more vocal about over the past couple weeks has been BlackBerry, ticker symbol BB. This is the $3 call expiring June 20th. I am also looking at the $3 call that expires January 16th of 2026. So that is another leap, just like AMC. But first, I'm going to go over the data here with the June expiration, then get into the January expiration. And so from this, I did have 2 contracts. Now I'm holding 1. And I was actually planning on selling this on Friday, on yesterday, the 13th, because I needed to reduce my position count to less than 20 or 220. But actually a different one got filled, so I am still holding this contract. And I would add another one at 30. But otherwise, if it doesn't dip to 30, which we haven't seen over the past week, or, really we did see a couple weeks ago, that would be on December 12th. But, I don't plan on being too aggressive with this one, just because, while I think some of the data does suggest that this could be going a lot higher, I think there are some other ones that, I'm a little bit more excited about. And, I do have 2 contracts in this, so I'm not too concerned. I can add more on dips if it does, or I can just hold and or trim as it rips, sticking to my plan. And so what we see over the past week, I'm actually just going to, no, I won't do that. There's no comma there. I like to have the commas, but I'm not going to change it here because I don't have the ribbon up there. But so what we can see over the past week, we did see this spike in volume, so that looks really good. It looks like it was on Friday. If we look at the volume, 2,100. So actually, I'm probably just going to, just highlight this, and then I am going to adjust the formatting of this text, more number formatting, and let's see. Man, I guess I'm not going to adjust this because I thought it was, let's see. I want it to be like this, and actually, no, I'm not going to do that now because it will just get a little bit messed up. So what I will do is I will scroll to this one, copy that, paste that to get the formatting, and then I'm just going to drag that formatting down and just do the formatting. So there, now I feel good about that. Sorry about that. But so this one stands out to me because of that comma. A spike in volume of over 2,000 contracts. We'll have to see on Monday if those were bought or sold, which will be reflected in the open interest being held up here. And so, I suspect that it was buying because I'm really bullish on this, but maybe not. We'll have to wait and see. Other things that stand out with this total premium, that was 90,000. So, again, it's not like 250,000, $250,000, measuring that in million relative to $1 million. So it's not really that huge of positions, but this is a stock that is trading, right around $2.69, which is its close on Friday. And so, I can't necessarily expect millions of dollars to be traded on this. 90,000 spike there in the volume. Relatively, that is a spike. And from the spikes that we've seen in the past, it has increased generally with some little pullbacks here and there. And so anyways, just taking a step over to look at the chart real quick. I had talked about this when it looked like it was breaking out from this downtrend, or at least testing that downtrend, forming a bull flag, broke out. And now it looks like we could be pulling back to retest not only that downtrend, but also the 382 of this Fibonacci retracement. So going from the low that was hit on August 5th when the markets gapped down, BlackBerry hit a low on that day of $2.01. And then just recently, we hit a high of $2.95, also being just below $3 a share, psychological level, and being the strike for the calls that I'm looking at. So, this pullback, I think it's just going to be to retest not only this downtrend, but also the 382 as support right around there. Might get a little bit lower than it, but that's no big deal. And I should know that 382 is around $2.59. Maybe we pull back to 250 and then bounce. We do have earnings, it looks like, coming up on the 19th. I wasn't really thinking about that, but I think that, if we pull back to this level prior to earnings, which would be on, I believe, Wednesday. Wait, no, the 19th. That would be Thursday because 20th is options expiration. Yeah, maybe if we pull back, we find support and then it launches. So I just feel good about this. Looking at the chart, do think that we could be seeing price getting up to 340 or 385. So I think a $3 strike is a pretty conservative one. But so yeah, let's look over at the unusual whales data. You're first looking at the expiration for the one that expires June 20th. And we can see that we did just recently see a pretty big spike in volume for this contract. The volume on Friday, it looks like it picked up a lot. Over the course of the day, spike of 2,100, as I mentioned. So this data, those bars that we see there, or that yellow line, that is going to be analogous to or very similar to, wrong window, what we see over here. So, we've got this blue line here going up. So that should effectively be the same as this. And we have the gaps here because there was no data. So look at that. That's like the exact same thing. So I'm basically just extracting the data to plot that to get a better understanding of it. And then this yellow line here, that is going to be effectively the same as this green one that I have here. That is the price of the share. So getting that same kind of information. And then volume, we have these spikes here. That is represented as this like bar chart with those candles there. And so the volume that we have here, I don't have that represented by bars, but I do have it represented by, this line. And so we do see a spike here corresponding with a spike here. And then the more recent spike corresponding with that there. So, it's the same kind of data. It's just that for me in my learning, it was a little bit more easy to actually dive into the data, handle it, work with it in Excel to plot this up. And so now I can just better interpret the data over here, which is, made available to me without having to do any formatting of spreadsheets. But anyways, there's a good amount of rambling there. And so I just wanted to scroll down. We can see that total premium traded on Friday was almost 90,000, and that's what I was talking about over here. So that makes sense. There's no real, I guess there is graphical representation of it, but it's a little bit different, because this is net call premium. So it's a little bit different. Well, we see the net premium traded. This is for all contracts, I believe, for the 13th. $30,000 net premium, so the premium overall, 471,000, almost 472. So that is, pretty high. But yeah, so just for this contract, we have it over here. And so that does suggest, and this does really support, what we see in the volume over here and the candles over here. So very similar there. I will look at the other contract first, and then we can look at other contracts that might be supporting whether or not this is looking bullish. I think it's looking bullish. So for this one, this is the $3 strike call that expires January 16th of 2026. And looks like I had 3 contracts. I sold one, and I'm just waiting to sell the other ones. I might, have it in yellow, just looking at buying the dip if it goes down to 60 cents, but my average is 66 cents. So I don't really want to be buying if the low is 70 cents, increasing my average. I want to be lowering my average. And from this, we can see that the underlying stock price as well as the premium has generally just been going up. We see these nice spikes in volume. This one corresponding with about 70,000. This smaller one corresponding with about 40,000. Open interest. There was a little bit of a pullback here, but generally it's been going up, so that's good. And then implied volatility, that is, right around 70. So a little bit higher than 70, 74. So not too bad. If we look at the other contract, also right around 70. So both of these seem like they're kind of in like the buying territory. And yeah, and so the reason why I have this one yellow, like I'm looking at it, but don't have a limit order place, is just because this one's cheaper and I only have one contract. So get this one up to 2 to get it to be even with this one. So that's kind of, my thesis there. But then let's look over at the options data for the January 16th, 2026 expiration. Again, the same type of stuff that we were just looking at. And if we look at, over the course of the 30 days, I went over this with AMC, but not for BlackBerry. We did see a pretty big spike in the net call premium, but following that, we saw a drawdown. But we also saw a drawdown in the, negative net put premium in red there. So that is kind of, people are just getting out of their contracts, whether they're long or short on them. But then following that, we've seen some spikes in net call premium, whereas net put premium has been more or less flat. So, that seems like people are buying calls versus holding or, not buying, not selling puts. And yeah, so I mean, this one though, the premium trade, 11,000, 15,000, nothing too crazy. And so if I do go up here just to type in, BlackBerry and hit return there, I get the list of the highest volume contracts. But, if some of these contracts are traded at a very small premium, 13 cents, it's not going to be super notable if there's a lot of volume, but it will be notable if we filter by premium. So just going over here to click on that. And so we can see that the highest premium traded was actually the one that I'm looking at. So I'm actually kind of surprised by that because I don't typically go for the ones that are most exciting. But yeah, it's right around at $90,000 net premium traded on that day. So I think that this one looks good, but it's not super flash or anything. Nothing's jumping out to me about it other than, looking at the chart and seeing these two levels. And I think we might pull back to those levels before we really launch. So the thesis remains the same. I think this is going to $3 a share. I think this is going above $3 a share since we did get rejected here. I think a pullback and a bounce seems likely to me, but I could be wrong as, I'm just some guy on the internet having fun doing this. And so the next ticker is going to be Celsius, ticker symbol CELH. This is the $50 call expiring June 20th of 2025. And so this is one that actually didn't hold. I held a different contract that I think expired in March. But that was just a little too close for comfort for me. I like to have them dated a little bit further out. And so this one, I would be getting interested in it at around $1.50. Nearly hit it on Thursday. But, even if this would have been $1.50, that may have not been filled if I had an order placed, which I do not have a limit order placed on this one. But I am just kind of eyeing it. Because it looks really good. And so I'll go over that. And that's really going to come from not this contract necessarily, but other ones in unusual whales. But this is the one that makes the most sense to me if we look at the chart, which I will do before looking at unusual whales. I think price could be heading up to $50 a share by June 20th. And so what we see is kind of perhaps, bottom being formed here with the underlying stock price in green or the average premium price of these contracts. So, that's kind of what I'm thinking. We also see these spikes in volume in blue here. This one corresponding with about $60,000. Got some other spikes here. And, this one corresponding with, let's see, 250 contracts traded there. But for over here, the blue, that's about $50,000 traded on that day. We do see open interest steadily increasing, so that looks good. And the implied volatility still below 80. So I think that there is a lot of good opportunity with this still. And so just kind of going over the thesis about this going up to 50, and actually I think if we look at the chart, I think 40 might actually stand out a little bit more. And so, yeah, I think I just kind of arbitrary lines, effectively what I drew up here. We've got this double top over here going back to the highs of August 2022, as well as the highs of December 2022. Got a double top there, also a gap up above that level, and then didn't revisit it until over here, so that's right around 40. I could see that. If we do go past 40, got, all this consolidation just below that level, right around 50, marked there by that white line. And also just 50 being kind of a psychological level, half of 100, which was basically the double top up here, hitting a high of $99.62. So this is about the halfway point up to there. And so, yeah, I could see that being some resistance. And yeah, I mean, there's just, I think that this has been, some accumulation, and that the bottom was put in around 25.23, hit on November 18th. So that's kind of my thesis with it. But I should note there was a lot of chatter about this on X and, the different platforms about this being potentially a falling wedge over here. But then we did break out, but then we did retrace to go lower than where that falling wedge was. So, good to not be super aggressive with this one, or at least at that time it was not good to be super aggressive with it. But I do think that we could be seeing this breakout soon. Also, it does kind of look like, a little bit of an inverse head and shoulders pattern here maybe, but maybe that's just hopium. But yeah, I mean, I think that this could be going very easily to $40 or $50 a share over the next 6 months or so. And so just pulling back to this table, this was a contract $50 strike expiring June 20th. So let's look at that in unusual whales. And so here from the data, basically what I went over, nothing really standing out recently. Just flipping back here, this was a higher volume traded day back in November versus what we saw over here. So, nothing too exciting about this contract. We scroll down and look at the premium right here. Nothing really stands out. And so one thing that I did just by typing in Celsius, CELH up here, hitting that search button, I found another contract that really stands out to me. This is the $40 call that expires July 18th of 2025. So just a month beyond the June 20th expiration, and also being at that $40 level rather than that $50 level. In this one, no action over the past 30 days. Nothing. Effectively nothing. And we see this giant candle here, and that was, I believe, on Thursday. And this is mind-blowing. My mind is blown by this. Look at this total premium traded. 18 million. That's a lot of money. That's unusual. And so that volume traded on that day was 38,000 contracts. Open interest went from 172 contracts to 38,000. So pretty massive. I don't understand how you can't be bullish on something like Celsius right now. This is, take my money, that gif or that meme of Homer saying, take my money, take it all, That's what this is telling me. This is, that's the biggest blue whale I've ever seen. So I feel really, really good about that. But for me personally, the price of these contracts, the low on Friday was $440 per contract. That's pretty expensive. And so, with that being said, I feel like the one that I have been covering, it's a little bit more attainable. 227 was the low. It does look like the premium, though, if I switch this over to the day for this contract, we can see about where that premium ended, right around 240. So, but maybe there's a pullback. And so looking at my spreadsheet, I have 150. I don't think that's going to get hit. So I think maybe I should change that to 220. I don't know. Just keeping an eye on it. But if it does dip to 220, I think it's going to bounce. I think this looks really good. Yeah, because that was on Thursday when there was all of this volume. Wait, this is a different contract than the other one over here, the $40 call. So all of that volume, yeah, was on Thursday. So that was when there's this dip to 188. So dang it. Yeah, so I think 220, something I want to keep an eye on. And actually, that's why I'm not too aggressive with AMC or some of the other ones on here, because, Celsius is one that I like to buy the dip on because the data supports that this is looking really good. So, yeah, I mean, I'm like, my mind, yeah, if I just go over to the 2 days, So like if I look at the 1 day, we got, oh, there's some candles here. There's some activity for Friday. But then I just expand it to 2 days. Effectively, there's nothing on Friday because that candle was so flippin' big on Thursday. And, while it looks red, bid side, so you'd think selling, the open interest went up massively, meaning more of these contracts are being held. $18 million. I'm excited about that. And so, with that being said, the way that I found this was just type in up here Celsius. So let's type that in. We can see the highest volume. So this is just going to be for Friday. $33 call expiring December 20th. That had 300,000 on it. So that's more than $250,000. So, that's good. Let's look at the premium. Let's filter it by premium. Hey, there's some even higher than that. So that's why it's good to filter by premium. Over $650,000. It's a $35 strike. This is January 17th. For me, it's a little close for comfort. But, yeah. But I don't know. This is risking, $135 versus $200. So maybe it's, but, personally, I'd rather have that extra time, that extra window going into like June rather than January of 2025. So that's a little risky to me. And then, getting into these other ones that strikes lower. But, I feel like it doesn't even have to go to 50 a share. It just has to go towards 50 a share. So I like this contract. So I'm sticking to it. But, no buy orders placed. Just keeping an eye on it. So we'll have to see what happens on Monday. But yeah, this one, I don't know how you could not be bullish on Celsius given that amount of premium traded on Thursday. So super exciting there. But anyways, the next one on the list is going to be ChargePoint. This is the $2.50 call with that strike expiring May 16th of 2025. And so this one I think actually might end up being a little bit of a dud. And the reason for that is just because, it's, it's a penny stock. It's very, very low in the price. So the strikes aren't going to be that interesting. There's not going to be a lot of interesting options activity, not a lot of unusual options activity. And and so I just think that it's a little bit better to be following the ones that have a lot of that options data, whether or not, one wants to be trading options. That is at least just data to say, hey, somebody's putting $18 million behind Celsius, and, the premium for ChargePoint here at a maximum is about $5,000. That's a little different. Do I want to be betting on this, or do I want to be betting on the one that has the money behind it? Yeah, so I think this one might be a dud. It's possible I will end up cutting this one at either break even or 10%. So we'll have to see. But, I only have 4 contracts here. My average, it looks like, is 11 cents. So I'm risking about $44 on this. I don't have a buy placed on it. Did have the order filled for one more contract at 9 cents on Friday. Could have potentially gotten a fill at 7 cents. But as you notice, I had a limit order placed at 9 cents. That was the low on Thursday, and I did not get filled. So just because it says 7 cents here doesn't mean it necessarily would have been filled, but I could have maybe had, 8 cents filled. But, I kind of want to just have some on the side for something like Celsius or Neo, or I believe RIVN is the other one that's exciting to me. But again, this is also, don't want to fall in love with these. ChargePoint is one that I have shares in. I've held a good amount of shares for a little while. And so, I got some attachment to it. But I, again, don't want to fall in love. And so, for me, it's kind of like, well, I'd rather just do the shares and not really worry too much about the contracts, expirations, whatnot. But what we can see in the data here is that, premium the underlying stock in green, pulled back a little bit, then spiked up. It's pulled back again. I was pretty disappointed, closed the week at $1.15. I was wanting this one to hold $1.25, and it looked like we were initially, but then we did break below it multiple days, closing below 125. So that's pretty disheartening. We do see with that, a drop in the premium and also the position that I have, which is very small. Again, all of my positions are very small, really just kind of learning, getting more familiar with this, managing money, managing emotions, all of that stuff. But you can see that my position has been decreasing in value because I have been averaging down. We can also see the spikes in volume. This spike in volume here that was pretty big, that only corresponds with $9,000, so that's not even a YOLO as far as Wall Street Bets defines it, $10,000. So not even one whole degen in a room or, in the seagrass nomming on it. It's like a manatee that got hit by a motorboat, so it's not a whole manatee, not even $10,000. So this one doesn't really stand out to me that much, but some good things about the volume is that following these spikes, we have seen steady stair-step increases in that open interest, so that is good. We look at the implied volatility, it is above 100, so, I think that this is kind of, this is more of a bet or a gamble, I would say, than something like Celsius, Neo, or RIVN, in my view, based on the data that from unusual whales that I'm looking at. But let's first look at the chart, and then I will look at this contract. And so here, looking at the charge point chart, I had, this line, effectively hopium. That did not happen. We got rejected with these big wicks. So that's kind of a tell there. Even if you want it to go higher, those wicks are telling us that it's getting rejected from this red trend line that's based on the low from April 22nd, as well as the low from June 25th, those both being from 2024. So connecting those levels, got rejected from it, pulled back, had two closes below this parallel channel, which, could be, it's just based on the pivot points over here. So I'm sure you could adjust that. Maybe the close on Friday, you could, move that parallel channel around a little bit. Maybe we close right about it, at it, and, then Friday we definitely close below it. Maybe we get a bounce, but I think this could be revisiting 108. And so that's kind of why, I want to put the brakes on this. It does look like, too, with the MACD, we see this nice big green hump here with that price going up, but then pulling back. I think that, this needs to cool off a little bit before finding a bottom. And so I think that we might be revisiting 108. So that's why, I kind of like, it might be just 8 cents for a contract or $8. But I might put the brakes on with it because there's just not a lot of data supporting this going higher, or at least not right away. It might go lower, finding a bottom at 108 before going higher. So that's what I would expect. And if we look over at the unusual whales options data, just looking at that contract, $2 call expiring May 16th. We see over the past 30 days, saw a spike over here, and then the average fill for that premium going up, but then pulling back. And so, yeah, this doesn't really stand out as being too exciting over the past 30 days here. We did see spike in buy-in of calls, and price did go up following that, but it has since pulled back. We don't really see too much as far as calls or puts, red or green lines there. They look like they're right around zero. So nothing really stands out to me about this contract specifically. But if I do just type up here charge point to get a look at all of the contracts, these are organized by highest volume, which again, if they're trading at 5 cents, you can have tons of those contracts traded. Doesn't really mean a lot versus, a contract that's trading at 32 cents. You have fewer of those traded than these. You could still have more premium traded on this one, and that's really where you get the signals from those whales as far as I understand it. So I'm just going to filter this by premium, and yeah, the highest amount of premium traded on a contract on Friday, the 13th, was $17,000. So again, it's not even 2 degens YOLOing. It's not even 2 whole manatees nomming on that seagrass. So this just doesn't stand out to me as being too exciting, so I'm not, going too crazy with adding to the position here. So I'm just going to kind of chill and set that aside for something that I think is maybe a little bit more appealing. And so the next one that I will be going over here, I've got 2 calls. This first one is a GameStop $50 call that expires June 20th of 2025. I will also be going over the $80 call that expires June 20th of 2025, which is one that I do hold. I got 2 contracts, it looks like. But I'm first going to go over this $50 one just because I think that, 50, I'm not sure exactly how this got put on my radar. I might have just had more volume. But yeah, let's look at the data here. And so what we can see with this one is that price in green and premium in blue, went up and then they've pulled back a little bit. We have seen some spikes in volume as open interest goes up in green there. So that does look good. Those spikes in volume look like they correspond with here, this one being over 80,000. So that's 8 degens, but not a huge amount. But then getting up to here, that's, again, still not measuring it in $250,000. It's above 100,000, but it's not $250,000 or getting into the so it's still not huge, but we do have some nice spikes there. And the implied volatility, why is the implied volatility? Why did that get cut off? And so I might actually, yeah, it's got all of that there. I'm not sure why that that stopped showing. So that's the 13th. Oh, because of the date over here. So this, I should actually, let's see where, sorry about this, but I should just fix this. This should go up to, let's see, that is column A, and that should be going actually to row 3, which is hidden. And so this A3, what am I looking at? What am I looking at? A9A. Okay, so I think I just want to hit the return there. Yeah, what the hell? Maybe, what did I do? Crap, we got to do surgery on this. So I'm going to drag this up. That was A9. Get the A2, but I want this to be A3. So I'll do that. There we go. That, I don't know, that makes it look better. But, let's see. Yeah, that one was screwed up with the data there. So now I've got that moved to this hidden row that just kind of serves as like the anchor point for those as I add more weeks to this. But anyways, now we see this going up, talking about the implied volatility over here. That did go up, kind of flattened out. Maybe, what I'm thinking we're going to see with GameStop is actually a little bit of a pullback. Maybe we've seen that, but, I'm not getting too hasty with my contracts. I don't typically, trade GameStop calls just because I get a little bit antsy given that the price of the premium. So I did get 2 contracts. So I will trim those at 20% and 80% profit, just, following my thesis. And so my buys were at first $3.50. That was on December 2nd. And I bought another one last week, or the past week, I should say, at $3 per contract. And then the next buy would be, $2.50. We have thus far, over the past week, saw a low of $2.95, so not getting to $2.50. So I don't necessarily expect an order to get filled at $2.50, so that's kind of why I have that in yellow, but also just because I have that cash on the side for those other contracts that, I think the data supports, being a little bit more in bullish mode. We're not really seeing that right now with GameStop just yet, just pulling back a little bit before the next move higher, maybe getting some more roaring kitty tweets next week. But anyways, just with this one, like the other one, there are some gaps in the data. So that's why you have, gaps here. But we see, kind of an increase in the stock price as well as the premium, but then a little bit of a pullback. I do got a small position there. And what we can see in the open interest, which looks kind of, funny, or that, yeah, it's the open interest. So it kind of like spiked up here and then, came back down. So yeah, open interest. Maybe this is something that I need to investigate. But that's 306, yeah, because it went up and then came back down. So let's actually first look at the chart. I think it's always good to look at the chart, get an idea. Yeah, so I think it still looks like, It's a bull flag, is my view. That's kind of maybe my bias though. But we're now trading below this orange uptrend, which is based on these two pivot points going back to the low of I believe 995 hit on April 23rd. And actually no, it's so yeah, it's not the low of 995, but the low of 1001 on April 23rd. Kind of got like a bounce from that trend line going up, and the other pivot point being the low from August 5th when the market's gapped down. And yeah, so I mean, I just think that we're trading below that uptrend, so that's unfortunate as we were above it, but we quickly broke back below it. And so, I think that we might consolidate here a little bit before we get the next leg up. Maybe happens next week with the monthly options expiration on the 20th. Maybe we start to see, some gamma ramp action going on. Start launching above 32.12. I could see that happening. But then looking over at the data from Unusual Whales, I kind of wanted to look at this $80 contract, $80 strike that expires June 20th. And so, yeah, I was curious looking at the open interest because that was kind of interesting to me that, so there's this volume spike of 306 on the 3rd. So if I flip over to this, 306, it's behind Ed. So you scroll that up, 306 volume on the 3rd, which, we had about 493 contracts on that day. There was a little bit of a sell-off, and then that spike in volume was looks like a majority being sold on the 3rd. And so on the 3rd, which day was that? That was over here, and that was actually kind of selling into a valley. So not really the best day to be selling in my view. But that's why we have this big bump up there and pullback. And actually, I should look at where was that the buying when the contracts increased. So we saw, let's see, a notable increase that would have been on the 24th. Yeah, so that's why you get that spike in the open interest followed by the pullback. But net overall, general trend, open interest is increasing. There was just a little bit of a blip there, it looks like. But yeah, so if we look at, this contract kind of went over everything with it, nothing too crazy going on with that. Over here, it does look like for GameStop, generally we have kind of a spike in the buying of puts. So I think we're kind of in like a downtrend right now. Might be continuing to go a little bit lower before we, find a bottom and really bounce. As the calls here are a little bit negative there. But again, it's what stands out, I would say, is more so this spike to the downside here with calls. So that's net call selling, as far as I understand it. Here, this is net call buying. So it doesn't look so great in that sense. If we look at the $50, let's see, strike again for June 20th. This, it looks like it has more sustained, consistent trading going on with it. So just a little bit more volume. So maybe there's a little bit more value in following this one versus the $80 strike. But, I think it's also good to just go up here and to check which contracts, A, had the most volume, but that's also going to relate to the amount of premium. So this one, had a lot of volume, but the low was 1 cent. And also, these had a lot of volume because they expired. The top 4 on this list, are December 13th. So that was yesterday. They've expired. So not as useful to look at those. So I think it's really good to look at the premium over here. And we do have a pretty big contract. This is over 5 million, almost 5.5 million traded on it. The next one down the list is over $1 million. These, unfortunately, both happen to be puts. These are long-dated puts. And I'm not sure if these were being bought or being sold. And so, yeah, I mean, I think it's a pretty safe bet to think that GameStop will be closing below $125 because current price is right around 28. But maybe this person or let's take a look at this one. This is January 16th of 2026. This is a leap. Let's also look at the one that's coming up just a little over a month from now, January 17th. So let's just look at those real quick, just to look at the data. And we see, there's not much open interest on this. It's just that the premium on those is, let's move that decimal place over. It's 9,000. over $9,000 per contract. So you trade 40 of those, that's a lot of money. Or trade 100 of those, I should say. That's a lot of money. But we don't know if those were buys or sells. And, I would think that this might be going. If this goes down to lower than 40 on Monday, then that would be suggesting that whoever was selling these, thinks that price could be going towards 125. So that is bullish. Even though this is a put, it could be given some bullish data. But right now we've seen no change in the contract, so nothing too much there. If we look at the one that's dated, out into 2026, there's a little bit more activity with this one. It does look like this has been increasing. So these are, millions of dollars on this. This is lots of millions of dollars. This is, more so bearish, I would say. But I wouldn't say it's necessarily long-term bearish. I just think that, like I said, looking at the chart, I think that we could be, just doing some consolidation, maybe retesting 27 some more, maybe even break below 27, fake some people out, get some dip buys at 26, maybe 25.42. I don't know. I have no idea. But I think that the data for GameStop doesn't really tell me, it's not screaming at me, stock price is going up. It actually says more so that stock price is going down or not going up to 125 by January 17th. So good to consider that. But yeah, we'll be moving on to the next one, which is going to be the Hycroft Mining, ticker symbol HYMC, $3 call that expires on May 16th of 2025. Again, I think this one could be a dud, and the reason for that is just because there's not much, dollar signs behind it, as far as I can tell. And so what we see here, we've seen some spikes in the underlying stock in green there, but generally trending down. Same with the average price of that premium. And my position that I have has been trending down as well. This one, it looks like I have how many contracts here? 1, 2, 3, 4, 5, 6, 7. So 7 times about $52. So I'm risking about $350 on this. I think I was getting a little too aggressive with it. So I'm calming down. No buys right now with it. Just really because if we look at, volume spikes, those corresponded with, not even hitting like $4,000. This recent one just hit above $4,000, premium 4,100. So, it's not a lot of money. It's not a whale. It's not even a manatee. Maybe it's a sea turtle. Maybe that's a good hierarchy. We're not even in the mammal land anymore. Mammal realm. We're in the amphibians. So yeah, I don't think that this really stands out as being, oh my gosh, that's bullish. It is good that open interest is going up, but there's not much money behind it. There's not hundreds of thousands of dollars behind it. There's just like tens of thousands. So yeah, this doesn't really stand out to me. I think it might be a dud. So I just kind of want to put the brakes on a little bit. But let's look at the chart. I know there was a level that I was hoping would be respected. It still has been. So this could be a dip buying opportunity. We've got, this trend line here, basically from the low of the 11th of September and the 11th of November. That also kind of rhymes, So I think that's a very significant trend line in that sense. Also, from this Fibonacci retracement, we got the 786 at like 216. We are trading above that. We wicked to a low on Friday of 218.1. And, it looks like we've been respecting this uptrend. So maybe this is the dip buying zone. If I do flip back to the spreadsheet here, I bought one at 35. That was the low on Friday. So, yeah, I'm feeling good about that. My average could be lower, especially if I was more aggressive with my buys down here. But, I just think that if I'm limited, if my funds are limited, I want to be putting them to use in ones that really have the data behind them. And so Hycroft is not necessarily one of them, but let's flip over to unusual whales to look. And so here's for that contract. It's all, the same kind of day. We've seen these spikes, more recent spike that's a little more notable, but we scroll down here to see change in open interest. We haven't seen what that change in open interest is yet. Hopefully, it's another step up in this progression of generally increasing open interest, although we did have this pullback here. So, I got to note that. But, I would like to see this continue to go up. But yeah, this is just, looking at this data over here. This is over the past 30 days. We've got the net call premium not really being too aggressive to the upside. Puts, though, also not being too aggressive, pretty much just being zero. We did have, selling of calls here, buying of calls here. Now it looks like we're selling calls generally. So this is for all of the contracts, not just this one. And speaking of all of the, and I should note, scroll that up so you can see it. Now this dip in the net call premium, as you can see in the key there, that, is negative. So that would suggest selling of calls, which is bearish. But yeah, if I scroll up to here, type in Hycroft Mining, HYMC, we can see all of the contracts. These are sorted by highest volume, but if they're pretty low premium, it's not really going to tell us too much as far as that volume goes. So I think it's best to filter by premium. And so really it's like, price is at $2.23, volume traded on like a $1 call, $3 call, $4,000, $5,000. There's not much there. So I don't think this one is worth getting too carried away with. And speaking of ones that are not worth getting carried away with, actually, no, the next one, I got ahead of myself. The next one, I think it's pretty exciting. This is the Intel, ticker symbol INTC, $30 call that expires June 20th. This is one that I had been accumulating. I had seen some charts from Mr. Chart Norris, and this is basically me retweeting him and him, posting stuff. That put it on my radar, and he was talking about it on November 26th, which, that was over here, and, the premium's gone lower, stock price has gone lower, and so I just kind of viewed it as, well, I'm intrigued by it, but, I'm going to wait. I waited until I had some money on the side and established a small position. It looks like I just got 2 contracts that I would sell at 20% and 80% profit. My average, it looks like, is at 90 cents because I bought one at $1, one at 80 cents. I would consider buying another one at 70 cents, but we have not hit that over the past week. So that's why I got it as yellow. No limit order placed, just keeping an eye on it. And so the things that stand out to me about this are, the spike in volume followed by the increase in open interest. And that spike in volume corresponded with $2 million. So that's a pretty good amount of money there. So yeah, I don't know if it's necessarily blue whale category like that $18 million contract for Celsius, but that's like a mammoth blue whale, I guess I'd say, at least as far as what I've seen. So maybe this is not a blue whale, maybe it's like a sperm whale or a humpback whale. I think it's probably bigger than a minke whale though, because those I don't really know the sizes of them too well, but I know minke whales aren't too huge, but they're still whales. So so let's look over at the chart with this and kind of why I feel like this might have a bottom in, but also why I'm not being super aggressive with it. So let's flip over here to the Intel chart. This is, when, let's see, the 26th, is that when he was, yeah, posted on the 26th. He was bullish on this around the 26th here, but then it looks like it broke down. So he's had some funny tweets about it, just, jokingly freaking out about it, sweating, all of that stuff. But really it's just, it's the play, you got to see it play out. Sometimes people are very impatient about that. And so he was just having fun with that. And nothing to worry about. And this, for me, in my view, came back to a technical level. That being the 786 here from this Fibonacci retracement going from the low here on September 10th and going up to the high here. That was, you can see it up there. That was on November 8th, 786, $20.20. Also, I like that 2020. It's nice. Also, $20 a share, just being kind of a psychological level, thinking in $20 bills, whatnot. So that makes sense to me. And if we do take a step back, we do see this consolidation over here, right in the middle of that, the meat of that consolidation. Up here around 2169 is where the cursor is. It's funny. Like that number, it's fun. That's like in the fat around the meat. And right now we're right in the middle of that, so it's very high protein right now. And so I think that could be acting as support, could be a bear flag, but things that make me think this is not a bear flag is that, we had this big bearish candle here, this big red candle coming down 3%, over 3% on the 10th. Did have a pretty notable wick to the downside there. So that looks good. And then following that, we had this nice little doji, kind of a little bit of a dragonfly doji there. Kind of got a head sticking out of the dragonfly. So it's not perfect, but, a notable tail there. And so I think that looks like a bottoming signal. And then following that, bullish engulfing candle, engulfing the open and close from that day, and almost engulfing this candle, but did close a little bit shy. So that looks like right there, reversal pattern, could be a bottom, although we did get the spinning top here on Friday. Maybe a little bit of indecision, but maybe it's just, lighter volume before the weekend. So, I think that this looks like it could be putting in a bottom, but, also there could always be, wrong. You can always be wrong, so always want to have room for that. And so if we do look over at the data here in unusual whales for that contract, the thing that actually stands out, this is the one that I talked about. So it's like cool, it's just like a different way to look at the data. And this, I don't have to put any work into, virtually no work into, creating this chart, just have to search for it. But we see here, this nice spike in volume. And so let's see, the volume for that day, candle volume 8,740. So let's do a little bit of a comparison with this spike, just below 9,000. And so that was on right around November 14th. So let's scroll here to November 14th, 8740 right there. So that does match what's over here. So that's, I'm just basically extracting the data from unusual whales to make it a little bit more digestible for me in my learning process, because I'm a little slow. But looking over at the data here, this is for all of the Intel contracts. We see price is just being slaughtered. It's just coming down. We did see a good amount of calls being sold here, puts being bought here. But, following, this coming down here and consolidating, calls have actually been bought up while puts have more or less been getting sold. So I think that is looking good. So I'm not too worried about this one. It's just, deploying, the capital and whatnot. So if this does dip to 70, if I'm at work, I'll probably wait until after work, which means after the market closes, to try and buy the dip. And if I miss it, that's fine. I don't have to get everything. But if I do type in Intel up here, INTC, we can just see the highest volume contracts here. And so, again, though, that's going to be based on the premium for those contracts. So lower premium contracts might have higher volume, might have less money behind them. So I think it's best to filter this by premium, although the top one there is $1 million, and that is for the January 17th, so next month, 2025, $25 call, with the price trading right around $20.34 at close. That is bullish if these were being bought. But let's just get that to be organized by premium. We actually see a couple puts. So these are kind of interesting. I'll want to see. Actually, there's a call here that's effectively $1 million. What is $585? $565. That's nothing compared to $1 million. So that's effectively $1 million. These are all, potentially, ones to be paying attention to. Is this a buy or sell? I'm going to add that to my list just so I can check on Monday. Is this one a buy or sell? Good to note on Monday. For me personally, just about a month away. That's a little too close for comfort for me. And then these two, this one is actually effectively, yeah, I guess it's a leap. It's for 2025, but December. Yeah, so I guess I'm curious about this one. This one's a little too close for comfort, so I'll just look at the other ones that had, more than 1,024,000. These both had more than 1,024,000 traded on them. So, I'll follow up with those on Monday just out of my curiosity. And then speaking of curiosity, if we come back to here, the next one is one that I'm really just looking at out of curiosity. And that's because there's really not that much going on with it, as you can see with the data. So this is the Luminar, ticker symbol LAZR, $15 call expiring May 16th. And so I was curious to look at this because I kind of viewed Luminar. You can check out the video I recently did of it, which I believe is this link. If you want to freeze it, you can maybe take a screenshot of that and then copy the screenshot as text, type it in, whatever, or just go to the DGenEd YouTube page to find the most recent Luminar video. I talked about this possibly coming down to $6.11. I'll go over that in the chart in a second. And that's also why I was curious to look at the $6 put that also expires May 16th. This one has been super boring. There's really not been any trading since it was created, because they recently did a reverse split. And so these contracts became available. This one has been a little bit more exciting, having 10 contracts being held. But that is, represented by less than $1,000 of premium, if we add these numbers together, because there's an accumulation of, let's see, maybe there's another one down here. Yeah, still that's less than $1,000 if we add those together. And so yeah, there's nothing notable about this. I was just curious to follow it, and also why I wouldn't want to bet on these contracts, whether it's the call or the put, is, I don't know that there'd be any buyers if I wanted to sell, because there are only 10 contracts here at less than $1,000. I could feasibly buy more than $1,000 worth of these contracts. I wouldn't have anybody to sell with or sell to. So that's a risk or a concern with this. We do see that open interest has steadily gone up, but again, it may not be significant. With the put here, this is the one that I was actually more intrigued by, but there was just no data on what this contract was worth. It was worth whatever somebody would pay for it. And so this person just bought one for, almost $200. Who's going to buy it though? Maybe me. But no, in all honesty, I just kind of wanted to watch this because I feel like Luminar is going to be coming down to around 611. And so that is really just based on my analysis of the chart. If we look over here, there are a couple reasons why I think it could be coming down to 611. And so one of them is it looks like this Fibonacci retracement that I did from the low of September 12th going up to the high that was hit on November 13th. And from that, we got the 1618. So going beyond the 100% retracement, which is right to here at 1088, which was the low on September 12th. We take that one step down to the 1618. So this is the 100%. This is the 161.8%. And that is at $6.11. And also there's that nice trend line you might notice based on the pivot points over here. Maybe it's a little bit, adjustable. Maybe it's a little bit approximate. I'm sure it's not exactly right, but just to get an idea, there was, some support here before it bounced, support here before it bounced, again here before it bounced. And now we're back at that level, closed the week below it at a low, at the close of $6.42, a low of $6.34, which is the all-time low, the 52-week low. So that just because it hit a new all-time low doesn't mean it's not going lower. So I could see this hitting $6 a share, just there's no volume on that contract. But yeah, to the upside, why did I pick the $15 call? Because there's a gap here at 1470, and so I could see that getting filled. But, why I saw the 6 and the 15 as being interesting is because I felt like it could be coming down to 6 and then going up to 15. And so if there was volume, any volume, more greater than 0 as of yesterday, it was the first day there was volume traded on that put. If I do look over here, first day, volume 0, history of it until Friday, that would have been a really nice trade based on the chart. There's just nobody interested in it. And so, speaking of interest, I'm sure you guys are interested in me looking at the unusual whales data on this. So for that $20 call, I thought it was 15. Is it 20? Dang it. I lied. I lied about this. I need to change this. I am sorry. So I've been tracking the wrong call. And it's probably just because, let's see if there is even one for me to track on that. But, oh man, I need to look over here. Yeah, so this is the $20 call, not the $15 call. I'm an idiot. So let's look up. Yes, there's no data here. It's not interesting. You see price, went up and then it came down over the past 30 days. But this is, because this was pre-reverse split. This is not adjusted price of the stock, and then it shoots up and then it's going down. So this is actually the all-time low over here, because this was, I don't know what it says up there, 98 cents. Yeah, so I mean that's pre-reverse split. And so anyways, if we just type in to look at some of the interesting or more interesting, potentially more interesting Luminar contracts, this is the 15. This is the one I kind of wanted to be tracking. I feel stupid. Actually, what do I have on the thesis page? Dang it. I've been tracking the wrong one. So I'm gonna have to adjust this for next week because I'm an idiot. And that actually was more interesting. Volume 152, but it's a call and it's gone down. So maybe now is the time to be adding though. So that's potentially interesting. But if we sort these by premium, hey, there's some that, it's not $250,000. It's $1/10,000. That's not nothing. $9 call. It's, a little more reasonable considering current prices below 7. So let's consider that one. And then also, I was thinking the $15 call over here. So let's look at that one. I'm sorry, I've been doing the wrong one this whole time. And yeah, where are we on this list? So the $9 call, let's look at that. Premium, this is the most premium that's been at. So this could be suggesting a bottom is in. But 100,000, that's, I'd say like a dolphin. Manatees aren't as smart as dolphins. Manatees just nom. Dolphins like swim around and stuff. And so this could be like a dolphin, but it could just be like a herd of manatees, 11 manatees or degens that YOLO'd on this. So, maybe it's nothing too significant. But yeah, anyways, let's look at this spike here. That was from the 25th. I should see it in the data here, the 25th. Yeah, 200,000 back there. And then over here, 100,000. So this is potentially interesting. I'm getting kind of interested in this. And then $15 is the one that, I'm an idiot. I was supposed to be tracking. This one is actually looking interesting. But, you see the premium it spiked up a little bit here, but it would have been risky. So that's a good thing. You got to... You gotta go with the flow. And that's what we're doing here. And so we see spikes. This is again, this is degens YOLOing. This is like individual manatees. Nom, seagrass, nom, seagrass. This is a manatee that, got hit pretty bad by a motorboat. It's only like half a manatee, half a degen YOLOing. So nothing too crazy. Spikes over here. Some spikes, but nothing. I mean, this is like hopium in my view. People hoping that the stock price is going to go higher as it just goes lower. And I think if it hits 611, maybe $15 strike. Yeah, let's see, look at the premium. $50. I'd risk $50 on something like this. On this one though, would I risk $100? Maybe. We'd have to see. If I start to see this premium is a little bit more interesting. than, the $15 call. Yeah, it's just not too much. It's like consistent, but this is like, manatees aren't that smart. They're just nomming on seagrass. Like, oh, there's seagrass. I'll eat some more. Oh, there's more seagrass. I don't want to be following that. I want to be following that is, ooh, that's an execution. That was a dolphin attacking. I don't know what fish dolphin. That was a dolphin attacking um a short fish. I don't know. Some kind of fish. A shark. Yeah. Predatory behavior. So yeah, I think that maybe that's interesting, but maybe it's not. So I will track. I'm going to stop tracking the ones that I've been tracking because they're boring. And so I will track these other ones. So I'm going to adjust that for next week. So hopefully you guys like that. This was, I'm an idiot. It should have been 20. So, but yeah, I will get on to the next one, which is one that I could wave goodbye to. But, so let me know in the comments if you want me to continue going with it. Also, Unity software. Those are ones I might say goodbye to, but I did get a nice comment about Unity last week. So I thought I'd continue to track it here. I'm personally not holding it and don't really plan on getting into it. Just I missed it. Same with Mara or Marathon Digital, which is, ticker symbol MARA. That's the $35 call expiring March 21st of 2025. Also, that just being a little too close for comfort for me. I'd like to go at least 2 quarters out. This is, the first quarter of the new year, so I'm getting a little bit antsy about that. But what we can see here is you got this little spike here. This was a dip buying opportunity with that premium pulling back as well as with that stock price. Nice little move higher. Excuse me, I'm looking at it right over here in the monitor behind you guys, and Bitcoin is currently trading above $101,000. Who knows what's going to happen on Monday? Who knows what's going to happen over the duration of the weekend? But what I've noticed with Marathon Digital is that, let's see, what was this date here? That was the 18th. What was this date over here? The night. Okay, well, maybe this is the 15th over here. Yeah, so I've noticed that like over weekends, some crazy stuff might happen with Bitcoin, and then Marathon Digital like really moves. So maybe there's like a dip buying opportunity on Monday since we have seen this pullback. This is around 320. If this were to come down to 3, I'm going to, just make this yellow because, then it's like, well, maybe I want to consider getting a contract if it pulls down to 3. But then maybe, whales are about to rug longs or whatever on Bitcoin. But yeah, I think that this is a nice pullback. And, I don't have it here. It's TLRY Tapan, who is volatility on X. I recommend checking him out. He does a lot of nice charts on Marathon Digital. But there are a ton of people who do that as well. So, and with the charts here, the data here, we can see these spikes in volume. They actually correspond with premium going up to 2 million here. This one going over 3.5 million. And while, it might be kind of odd, like why these spikes here in volume are about the same size. Why is this premium going a lot higher? Well, if we look at, the prices over here, the price of those contracts went up. So it might be the same volume, but the premium has gone up. So that's going to be more money going behind it. With it, we see that the open interest has gone up with those spikes. It has, did pull back a little bit, but generally it's been going up following that little bit of a pullback. Implied volatility over 100. So, a little bit risky. But yeah, let's look over at the chart, see if anything stands out to me. I don't regret, but I could have, bought this dip. I think I did buy a share around 16 here, but that was before I was really getting into options and stuff. I did kind of like draw this doodle of this orange line that more or less happened just to more of an extreme to the upside and downside. And then now we are, we did test the top of that channel there, kind of formed a double or triple top, however you want to think about this, formed a top there before pulling back and now testing the bottom of that channel. And it does look like this is a spinning top from Friday, hitting a low of $22.30. So that could be a bottom indicator. So do look for a potential bounce. And just to note the pivot points for that channel, take it with a grain of salt. It does look pretty approximate. And I might actually just delete that box measurement there. But yeah, so yeah, I mean, I think we're at the bottom of that. So I think we could be seeing another move to the upside. And so I might draw that like this. But I could actually see it not just going straight up. I could see it going like that, maybe get caught in the middle of the channel before pulling back and then going to the top there. So I'm just going to draw that, make that line thick, and make it orange for Bitcoin. So yeah, maybe that's something that we see happening. Also, you know, getting rejected from like the top here before pulling back and then launching higher. So yeah, I mean, I think Marathon is looking great. I think that we're probably going to see another rally in Bitcoin before the end of the year. I think that we might see some selling in the new year in January, tax purposes, whatnot. For example, I've made some profits. Bitcoin, for me, that's like my retirement. But for Dogecoin, stuff like that, I made some profits with that. So I might be taking some of those, just lowering the risk in January in the new tax year. And maybe we don't have to pay taxes on crypto trades in the future. So that'd be nice. I would be excited about that. But anyways, enough going on about this. Oh, and also maybe not enough going on this. I should talk about this level that's right here. This is the golden pocket there. And so from this retracement, which was based on the low from November 18th, going up to the high that we recently saw of $30.28 hit on November 29th. So from that retracement, we got the golden pocket, which is the 618 down to the 65% retracement, right around 22 to 2250. And so we are there now. If we were to break below that, let's just throw it up here for curiosity. I guess I do have the 786. Yeah, I do have the 786. That is around 2042. That would also correspond with this purple trend line, kind of based around this little thing here. Maybe there's an ugly inverse head and shoulders there is kind of what I was thinking with that, I think. But, I could also see this as being, oh, well, there's that purple line there as well as the 786. I think price is going to come all the way down to at least 2050, maybe 2069. Let's have fun with it. And so I'm going to wait for that to add, establish, buy, whatever. But, the markets have a way of playing with us. And I think that, and tricking us. And I think that one of those ways could be, it's not actually coming down to the 786. It's just coming down to the golden pocket, the 618, whatever, right around 23, where I got that alert there. And, so that could be a dip buying opportunity. So, yeah, I just wish I had a mountain of cash all the time so I could just be like, yeah, I'm going to do that. Yeah, I'm going to do that. But I can't. So we have to come back to reality and we have to make decisions. And so let's be informed on those decisions by looking at the data here, looking at the Marathon Digital $35 call that expires March 21st. And so why did I pick 35? I should mention that, this is about a thesis. We can see, that arrow effectively goes up to like 33.50. But if I pull back, we see kind of like, effectively this high back here, February 28th of 2024. High was 34.09, so that's right around 35. Maybe get some resistance there because there was a wick up to that, and we got rejected. So maybe that would be happening again. So that's kind of my thesis for Marathon Digital. But yeah, let's get into the data. So, this is effectively what I just gone over. We see the premium going up kind of with these double humps, that we see over here, but it's pulling back a little bit now. And I think that's a dip buying opportunity. Total premium traded on this one for this contract, it's going to be a lot of money. There is just more money in Marathon Digital, crypto, whatnot. So we got some over $1 million, buys here, and we have seen generally more green in the open interest, just going up. A couple, sell-offs, a big sell-off here. But, this prior to that big sell-off was around almost 18,000, and now we're above 18,000. So I think that's looking good. We do see that, price that's in yellow over here, which I'll move up a little bit so I'm not covering it up. Price in yellow, kind of, bouncing, going up. Very similar to, what we see in the premium over here. And then we do see a big spike in net call premium, kind of a pullback here. So people taking profits here. And, I wouldn't be surprised if we start to see some pickups in the call premium with this. We haven't really seen too much. Yeah, so here with the net call premium going negative, we saw inverse of that with the net put premium that going up. Some more people buying puts, being bearish on it. It's come down. So I think that makes a lot of sense. It's kind of neutral here as far as calls and puts go. But if we do look at the general Marathon digital list here, sorted by highest volume, we can see that, let's see, you got some that are, over $1 million premium. So that's notable. But the highest amount of volume might be related to these being, 1 cent low premiums for the day. So take that with a grain of salt, because it looks like this was a $23 call, expired worthless, because it closed below $23. This was a $24 call, expired worthless. Take it with a grain of salt. So lots of volume there, because it's like, do I want to be holding this, diamond handing it, expecting to get a 29-cent pop in the last minute of the day, to then be, this closing in the money? Or do I want to just take, $1 per contract? And so that's effectively what was happening here with these lows. So that's why a lot of volume was traded, because people are just, well, I'd rather get $1 than nothing. And, because they were wrong about that trade. So I think that's why it's, a good example why it's good to sort this by premium traded, because now we've got 4, contracts that were traded on Friday, premium of over $1 million for them, getting up to, above $1.5 million for 2 of them. And so these are all calls. So, I don't know if they're going to be buying or selling. We would not find out until Monday, or right before pre-market effectively. So maybe I want to look at some of these. This one is, this is just a week away, so I don't think I'd get too much out of that. This one has a lot of money behind it, so maybe that's a good one. This is in the money, so it's just not as interesting. This is out of the money, but yeah, it's still that 2024 expiration. So yeah, there's another one for me to kind of follow up on, just for curiosity tracking stuff like this. Yeah, so generally, I think that with Marathon Digital, yeah, and actually, let's just look at that one. Let's look at that one. And maybe let's look at this one. I'll delete it from my list. So the 2023. So the $23 one, this, what's the total premium traded on this? Yeah, over 2 million back here. But this is the $23 call. This is risky for me. I would not be participating in this. But, we have seen a pullback in that premium. It is cheaper for this contract. One that's a little bit safer bet, especially because it's in the money right now, is a $20 call for January 17th expiration. We can see that, previously, yeah, there was some more activity with millions of dollars, traded on this. But then we also see the open interest decreasing following this volume. It was, some selling, over here. So taking some profits, whatnot. So take that with a grain of salt. And yeah, so I'll probably follow up on that, but maybe just for myself, maybe not for next week's video, but I'll definitely be following up with the $35 call for March 21st, because that's kind of intriguing. But maybe personally for me, actually, yeah, I might take up some of your time and look up a contract. This is another way you can look up contracts. So I like June. I think that's a fine expiration call. And the strike, $35. So I'm just going to scroll over here to get that. And I will add that to my list. Just out of curiosity, how much is that? $500. That's too pricey for me, dang it. So that's why I'd probably look more towards the March expiration date. Because it would be an in and out type of thing for me. Nothing to diamond hand. But something that I think is going to be Very, very exciting. I am super excited about this one. This is a new one that I added to the list. This is the NEO $10 call expiring May 16th of 2025. I also have been covering the NEO $8 call expiring June 20th of 2025. And so the reason why I added not only to the list here, but also to my position, the $10 call is because of this massive 2-day spike in total premium, both days going above $1 million. And then even following this pullback, we have seen elevated volume and premium. So, volume, I'm looking at it here, but it's reflected in the premium, the total premium over here. So it's just been like in the past, what have we seen in the volume? Not that much, highest 300 contracts, which was about $5,000. That's like half a manatee. That's not even a whole manatee. Got hit by a motorboat. Yeah, so it's, hundreds. Here's another one. That's a couple manatees. But, nothing that stands out too much. As the stock price in green has been fading, as the premium has been fading, there's been nothing too exciting going on. Until Monday and Tuesday of last week, not only do we see like a breakout in the price, but also a breakout in these premiums, a little high spike in volume representing about 40,000 contracts, 36 on Tuesday, 36,000. And with that, we see a boost in the open interest going up to like 70,000 contracts. So, that's 74. So following these spikes in the volumes, just massive increases in that open interest. So this is just looking really, really good. Just this is what you want to see in a chart. Nothing boring. But oh my gosh, that's unusual. And that's what we saw with this one. So this just makes me like super happy about this because NEO and like AMC were like the OG ones on this list. But I feel like, NEO is kind of like a ticking time to, break out. And I think that's what we're seeing. Just a little bit of a retest. And so I'm excited about this one. So I got, 2 contracts. I guess I should say what I got. Got 2 contracts on Friday. I got, one at 35, and then I did one at 31 just to get my average at, the whole dollar number or whole cent number of 33 cents. So no decimals beyond that. And, then I got a buy order at 30 cents. I suspect will be filled on Monday, but I think that we could be seeing some big moves to the upside in NEO. So maybe that won't get filled. This, just following my thesis, take profits at 20%, 80%, nothing too crazy there. With the $8 call, this is one that I've actually kind of like reevaluated how like my thesis in trimming because I've got 16 of these. I am just going to mention it by looking at what's on my phone. How many of these contracts do I have? What's the best way to look at this on my phone? Because I do my trading on my phone. So yeah, I've got 17 of these. And so that's a pretty big position. My average is 51 cents. So I've got a lot of money. This is my heaviest contract. So it's a little risky for me. I'm not antsy about it. I feel confident in it. So that's why I'm good. I was like buying heavy a couple weeks ago, more than just one a day. Last week I kind of put on the brakes a little bit just because it ripped up, but then pulled back some. But yeah, okay. So last week I did get 2 on Monday, 52 and 57. So probably 57 first, then 52. And then it's like, well, I should probably chill and not be so aggressive with this. I got another one on Thursday at 50 cents. I did have a buy order limit buy at 48 cents, which was not filled on Friday. And then just kind of like reevaluating this, like I'm super bullish on NEO, but I already have a ton of contracts and shares. I'm super bullish on Celsius. I have no exposure to that. I am, as you will find, super bullish on RIVN. I had a contract or some contracts, multiple of the same contract, but I sold those for profit, took profits, could have made more money on them, but I'm still holding shares. So I do have some exposure to that. So there's a little bug there. Hopefully I got it. So I don't want to be too aggressive with NEO because I already have big positions. And since It did, you know, I did trim at 0, 10, and 20%, and it has now pulled back to below my average of 51 cents, and I did add below my average. I was thinking it might be good, you know, to just be taking profits at break even again. Just trim one contract, gives me $50 on the side to move into other positions. Trim at 10%, gives me $57 to move into other positions, 20% again. So just kind of like repeating that thesis, because I got more than 5 contracts, I should just repeat that again since I did buy more. And so I had previously a limit sell, I think it was like 258, but then it just came down, so I did add to it. 256 or whatever is the 400%. And I was thinking like, well, if I do the math, let's see, of, you know, this times, you know, let's say 10. I don't even need to do math on that. So not doing all my contracts, but let's say just sell 10 at 250. That's $2,500. I'd be making more than $1,000 in profit with this. That would be excellent for me. So I was kind of thinking, well, you know, I'll just limit sell all of them at 400. But then it's like, no, man, just like chill out, trim when it's down here to lower that risk, so that when it does get up to 400% profit, maybe it gets up to 500 or 600. And that's not being greedy. That's following the thesis. I put an X there for a reason. And if I do look over at where this premium has been before, I guess the premium has been up to 180. So maybe I'm being greedy. I don't know. But I've definitely seen other ones like, you know, in, you know, $500, $5 per contract. So I could see it getting up to a 10X for me. And so I should let that play out. But in order to manage that risk and to have some cash on the sides for other plays that I'm also bullish on or bearish, depending on the direction I want to go in, trimming at these lower levels. So repeating, you know, these here, which is, you know, lame, it's boring. But when trading gets exciting, that's when I think it gets dangerous. And so I don't want to do that. I don't want to be in the danger zone. I want to be in the profit zone or the lower the risk zone as things go up. But yeah, with this, you know, this one always stood out to me because there was this spike in volume that corresponded with over $250,000, which, you know, it's not super huge. But looking at this other contract, you know, that's millions of dollars traded on those days. So this is like basically right here. This is like approximately 3 million there. With this, that's, you know, over 4 million, you know, on this going long, and you know, open interest is going up. So like, I feel really good about NEO. I feel super bullish about it. And you know, this premium's just been going up. It's been boring, but you know, I've been taking advantage. As you see my position, I've been getting that lower and lower. And so I'm excited about NEO. Let's look at the chart and then look at some of the data. Here, looking at the NEO chart, I had this, fallen wedge here that we broke out of. We got rejected, which I went over in the video, from basically the neckline of this inverse head and shoulders pattern, kind of wonky, kind of ugly. Maybe it's from over here. I don't know. But, that trend line, we got rejected from it. I could have trimmed more aggressively there, but I didn't. And now we've pulled back to around 450. We hit a low of 445 on Friday. This is pulling back to, let's see, this 786. We were consolidating around it before, and I think it's just like a breakout retest. We're no longer in this wedge anymore. I think we're getting into rip your face off territory. So I am ready for this to be going up to $8 a share. But if it takes a month to happen, if it takes 2 months to happen, I got plenty of time before June, before May, whatever it is, the date, expiration date for those contracts. June for this one being, May for the $10 one, which I only have 2 contracts of. And this one, which 17 or 16, I forget how many contracts. But yeah, June. So I've got, I want to be in the comfort zone, May, June, not the danger zone. And so let's look at some of the data from unusual whales. And so, I've just got a bunch of NEO contracts over here behind Ed's head. But yeah, let's look at that $10 one. There's like nothing going on the past month until over the past week, just the past 5 days. See 5 candles here. What's going on with that volume? That's exciting. And we actually don't see anything too crazy with the net call premium that, it's not too crazy there. It actually looks like it's like negative net for NEO. But for this contract, it's like there's a good amount of money going in on it. There was a big sell-off in calls here, it looks like. Big dump, but not here. We just see all the green here. The increase, 31,000, 24,000, 6,000, almost 9,000. I think that we're going to see that continue. So I just feel really good about this. The one that I'm interested in is the $8 call. This is the one that I'm most heavy in. Premium, it's like 10,000. It's nothing too exciting. These are the little fish. This is where the minnows like me go to feed. And, but doesn't mean we can't look at the data from the other contracts. It's a little more exciting. And so, yeah, I don't think I'd be aggressively adding to this one. For the $8 call, I just keep an eye on 48, but I don't have a limit buy order. For the $10 call that expires in May, I do have a limit buy order because I only got 2 contracts to that one. And there's some other contracts that stood out to me. I'm just kind of like throwing them all up here. This is the $5 call that expires September 19th. So that's like the end of the third quarter of 2025. So that would be like, I think, witching, whatever that is, quad witching, because it's the monthly, weekly, quarterly options expiration and some other data and stuff. I don't really know. But for this one, we see this big white candle. That means it's like no side, which I'm pretty sure that we're going to see the open interest is going up. Almost $2 million traded on Friday. And that's like with the premium being down here. So I think this is looking good. For the $4 call, this one expires January 16th of 2026. So this is the leap. It does look red. This was from, let's see, the 9th of December. But let's see, did premium go up or down after we see that red candle? Following, wait, what was that? That was the 9th? That was the 9th. Dang it. Let's see, scroll up. Yeah, it was the 9th. Okay, yeah, so following the 9th, even though that was a red candle up there, what do we see with the data? We see an increase in open interest going from about 8,000 to about 28,000, about 20,000 contracts opened following that day. So even though it's a red candle, it doesn't mean it's people selling. Maybe people selling to, or market makers selling to those who are bullish on this. And so I think we're seeing that. And also we see this one from the 9th. Yeah, that was almost $6 million. That's a big spike. That's a lot of money. Then we also have the $8 strike for, again, January 16th of 2026. Got some nice spikes here. And if we scroll down, this was again on the 9th, I'm going to guess. And that was, corresponding with buying. We see an increase of, 1,300 contracts on that $1 million day. So, I just think that this looks bullish. And if we look at the contracts from Friday, just typing in NEO up there, highest volume, we got some $1 million ones. But, those could also be, these are, the ones that I was looking at. And so we can just sort these by premium. We see about 2 million, about 1 million, lots of contracts, lots of bullish activity. I happen to be a NEO bull right now, especially when people are commenting on my videos saying that NEO stock is dead. It's like, well, yeah, misery loves company. And I'm sorry, I'm taking advantage of the dip while you cry about being down. I think that this is dip buying season. Maybe it lasts a month, but I think that all of the signs are there with these contracts. Loading the boat. It's not 18 million or whatever it was for Celsius, but, it's millions and millions of dollars going long on NEO. And so, I'm stoked. I think I'm going to make like thousands of dollars on this contract. But, I want to be following my thesis, which is super boring, trimming in increments along the way. But that's the way that I'm going to secure profits along the way. And then if it doesn't get up to 10x, that's fine, because I've already secured all of the money that I need over here to that. If these remaining ones don't go to 10x, that's fine. I still made money. And I don't want to fall in love too. So if it starts to look like, it's flattening out, or I'm happy with it, move on to the next one, I'll have made profits with it. So I am stoked about NEO. I hope you guys are too. I put out that video because I'm just like stoked about it, as you can tell. I'm going to continue on to the next one, though, which is Plug Power, ticker symbol PLUG. This is the $3 call expiring June 20th, my favorite date. And so this one, I might pull it up here. Let's see, from the DGen Ed YouTube channel. I did put out this poll. Yeah, this is the Neo Bull here. I'm excited about Neo. Also, RIVN, I'll get to that in a minute. Looks like it's a bull flag. I agree with that one person who voted. Make sure you vote in the polls I put out. This is something I forgot to do, which I'll have to do at the end of this. So let me not forget it. That might be a good thing for me to do. Check on Grok. And I should actually probably add that. Anyways, this is historical opening. It looks bullish, with it. This is pretty funny. Grok is fun. It's Bill Gates there. But yeah, so I put out this poll a few days ago now, 2 days ago, whatever it was. What price will Plug close at this week? And it was around 250 when I posted this. And the majority of people said above 250. And, that's like 2/3, more than 2/3 of these voters. 4 out of saying yes, 4, 5. 5 saying yes, 2 saying no. I just, it's like, don't follow the herd. If we're retail, so it's tough for us to kind of like, look in the mirror and be like, hey, you're wrong, buddy. When price is getting around max pain, I initially put max pain in this as $2.50. If there's a stock that's trading at $2.55 and market makers might have to deal with max pain closing above it, they're going to try to suppress it below 250. And so they were playing games with us with the price kind of oscillating between, above and below $2.50. And so this to me was kind of a tell that, well, crap, this is probably going to close below 250. Because, it's just like retail sentiment, market makers see that and we're going to get them to think that, so they buy more and we're just going to suppress it back down. And, and so this is one that unfortunately I don't hold any more of it. And so I recognize, like, when I put out that poll, that was probably the time. Like, I'm not trying to exploit people for data or whatever, but just like getting the sentiment, just thinking about, well, if retail is bullish, we're probably going to close below 250. And a couple days ago, that was probably, the average premium was higher. And so I sold 2 contracts at like 47 cents. So that was a 30% profit for me, I believe. Yeah, right over here. And so the only reason why I sold these is because I wanted to end the week with only 20 positions. I don't have a lot of cash on the side, so I just wanted to respect that. But I also, I hold shares of Plug Power. So it's not like, I'm missing out or anything like that, but then also to leave this buy order at 35 cents. If it does go lower, if it does go higher, I got shares, so I can take advantage of that. But anyways, I'm getting into a lot of rambling with this. So, just kind of like with the underlying stock in green and the average premium price, we see kind of like these peaks here. It's kind of like a double top there, kind of getting rejected, seeing a little bit of a pullback. My average is down here, or was down there. We do see, open interest steadily increasing, a little bit of a pullback more recently though, and these spikes in volume. But those spikes in volume correspond with like a maximum premium here of, 17,000. So that's like 2 manatees, but one of them got hit by a motorboat. So, it's not a huge amount of money going on this. So, that just got me thinking, well, maybe I should focus more energy on the ones that, just have a little bit more data behind them. But yeah, before I get into the unusual whales data, let's look at the chart here for Plug Power. And so, I had talked about, kind of wanting to form like a bull flag here. We could still effectively be doing that. We did get, this big wick down on Friday, hitting a low of 228. 225 seems like just like a psychological level, like $2.25. That's like 9 quarters or 2 silver dollars and a quarter. However you want to divide that up, you don't have to use dimes. Nobody likes dimes. So yeah, I think $2.25. might be, a good level. Also, got these red lines here, a lot of resistance throughout that region. So I think that might be, acting as some pretty notable support. So if we do pull back, let's see, the low over here from July 2nd was at 221. And so, yeah, I mean, maybe we retest that. Maybe that's a level, but maybe not. Maybe 225. But we also could, I got the thick purple line here. I was thinking this is an inverse head and shoulders pattern. Did get a pretty nice move up. It was just delayed. And we almost got to fill in that gap. High of 286, but that gap's at 292. So, maybe we just need like a little bit of a recharge before we go higher. Also, you see the MACD looks like it could be cooling off a little bit, but we could also get a run, as we do have this big wick to the downside on Friday, closing green. So that's like a nice hammer candle following that pullback. So that could be a bottom signal. So, I may very well have sold the last of my contracts at the bottom, but I lowered my risk and I stuck to my thesis of only holding 20 positions. I still have shares, and, I just got to manage my risk. And so that's what I did with it. I think that this is still very likely to go to $3 a share. But, I will add if it pulls back, and I will, kind of evaluate, as it moves forward. But yeah, I mean, it's all for me. I'm just recognizing it's all about managing risk and doing this on a weekly basis. Otherwise, I just accumulate too many positions, and then I don't have any cash on the side to partake in things. And so, I got shares, and I was hoping that, because I have two BlackBerry contracts, I was hoping one of those would get sold so that I could hold my plug power calls. But, just recognizing that, well, I got two contracts in BlackBerry. I got one contract and shares in plug. I'm spread too thin with these that don't have as much data behind them. But I would say that I'm probably more bullish on BlackBerry than plug, just because plug has a lot of resistance to be like sequential layers of resistance to be breaking above before really breaking out. Whereas I think like BlackBerry kind of already has done that breakout, retest, and then move higher. So anyways, too many tangents here. But yeah, I mean, I think that this could be hitting 3 in the next, maybe by the end of the year. And maybe I'm not holding contracts. That's fine. I'm not going to be holding all of them. Just like I wish I was holding shares of Palantir. I sold at a level that I thought was resistance, and it's now basically 2x from there. That's the name of it. Don't get emotional. Don't chase. Don't get FOMO. Don't be jealous. Be happy for those who are making money on things as they go up, and be happy for yourself. Myself. I need to be happy for myself if I'm making money, and I recognize that. I realized that by taking profits. And so, it is what it is. 30% profit, that's not too bad over, a couple months, weeks, whatever it was. But yeah, looking at the data here, on unusual whales, looking at the plug power contract, past 30 days, we can see that there have been some nice spikes, but just looking at the total premium here, this is data that, I extracted. So it is in, the spreadsheet. We see the spike here, just like in the data. We see like the spike here and the spike here. I actually have more than 30 days worth of data here. But yeah, we got that double top, effectively what I was talking about. Yeah, so I mean, this just looks like it's cooling off a little bit. But maybe in that cool off, if we see it kind of cool off over the next week, maybe we see a spike, bounce. I think we're in kind of like dip, buy, and or accumulate territory now. But I could be wrong. Always be ready for it to go lower. But yeah, I'm just going to... yeah, I guess I should note here, because I'm not too familiar with evaluating these. We've seen, the premium net, or this is the plug power share price go up, but then consolidate a little bit here. This could be a bull flag. Maybe it could be a head and shoulders pattern forming if we do start to go lower. I don't know. But we don't see too much going on with calls and puts. I would say net, it looks like there are more calls than puts here. And, the calls over here were balanced by puts. So this is buying calls, selling puts. Makes sense, that's bullish. It went up. Now, we kind of need to see the direction that it's going to go in. And so I'm just going to type up here, plug, so we can see, the highest volume contracts. And, again, take this with a grain of salt. This one expired. on the 13th, so yesterday on Friday, and the low was 1 cent because it expired worthless, being below 250. So again, think about those numbers, those levels. Are we being teased early in the week about it being above 250 and then it starts to maybe sell off and test that level? That's probably a sign that these contracts are going to be expiring worthless. And so this one did. Next week's, is still out of the money, but the low is 8 cents. But again, these are, low premium contracts. Of course, the volume is going to be high. So that's why it's good to look at the premium to see, which premiums were most traded. It looks like the $2 call that expires this coming Friday on the 20th. That being OPEX, for the monthly contracts, the quarterly, end of the year. So take that into consideration. That's a $2 call. And it does look like the open interest was going down. So that's actually kind of bearish that this is being sold, and then this $5 put looks like it ended up being neutral from the previous day. That's January 16th of 2026. That's a leap $5 put. It's already in the money, so grain of salt there. But this is, less than $100,000 on these, so it's nothing that stands out too much. And so I will go over in the next one some stuff that, in my view, really stands out. And so that is going to be with RIVN, ticker symbol RIVN. This is the $15 call that expires June 20th. We can see here with the underlying stock price as well as the premium of these contracts, the average premium on blue there, that we have, it looks like kind of formed this bottom here, and we have been forming higher lows in both the stock and the premium price, just looking really good. And I did have a position in this. I did take profits, which I somewhat regret. I sold at about 200, and the lows over the past week were above 200. But this is one that I would kind of like to re-enter because there's some really bullish data that I'd like to go over with you guys, which includes that on Monday of this past week, nearly $2 million total premium traded on this one. And following that, open interest went up by about 5,000 contracts, going from around 24,000 open interest contracts to 29,000 contracts in open interest. And, following that, we've just seen it increase, but just by a little bit for this contract. Implied volatility is still pretty low, below 80. And so for me, I get my attention, basically if this came down to 230, but I kind of just want to FOMO into it. But again, I got to follow my thesis. Don't get emotional. Don't FOMO. Don't get jealous. I do have some shares of RIVN, so I am able to take advantage of the increases in the stock price, if not the increases in premium. And so what we can see with this, increase in premium there, corresponding with this increase in volume, which is about 6,000. This was earlier. I actually posted to the channel. That was this one on November 15th, about $1 million there. And we've seen, this is what I think is really interesting. You just look at this. Oh, look at that spike in volume. Oh, well, this spike in volume that we just recently saw, it's much smaller. So, volume is lower. It's less bullish. But if we look at the premium of these spikes, that premium's gone up. So this premium was about 1,000. This one's about 2,000. And the reason for that is because the underlying stock price, premium price for these contracts has gone up. And so the premium has gone up. So you can have half the volume, but if it's doubled in price or more than doubled in price or premium, you're going to see a bigger spike in total premium. And that's what we're seeing. I think this is looking really bullish. The, open interest stepping up, and the implied volatility still being below 80. I think this is looking really good. There is another contract I actually wanted to look at with this, but let's first look at the chart and then get into some of that data. So here, RIVN, I posted on the channel. Let's see, I'll pull that up. Does that look like a bull flag? Let me know what you think about it. But if I scroll up here, is RIVN forming a bull flag? I don't know who voted here, but I'm going to have to say I agree with them. And so if we look at the chart over here, we got this nice breakout from this, trend line that we've been trading below. Effectively, a little bit of a fake out over here since the high of September 2022. And we've broken out of it, and following that breakout, looks like we formed a bull flag. And so with this, let's see, we could get perhaps, let's see, I might do a Fibonacci extension going from the low of 950. Is that the 52-week low? Well, actually, let's see. Yep, so this one here, I don't want to do that because it's from here to here. So let's just do, from here, 950 up to the high here of about 14.99, and then coming back to the low. Let's see what the levels are that would be on there. Let's add the 100%. That would give us, a measurement of this move from that low. And that's saying that price could be getting up to like 1872. I think I'm gonna want to FOMO back into that contract because like this, I'm gonna do the same thing, but from this low, actually maybe from this low to this high, and see where that takes us. So from this low to this high, then back down, that's the 100%. That's the move that we've seen. So basically, we're looking at a repeat of that. Or, maybe I'm getting ahead of myself. And, I'm going to color this one light blue so we can differentiate it. And so I got that light blue one. So this one, I might do this one yellow. And then so we can do, because I have this one, kind of a smaller scale, bullish consolidation, bull flag there, I'm going to do the same type of thing, but from here to here and then down. And so from that, did I color that? I just need to make sure I colored that other one yellow. No, I thought I colored it yellow. Let's do that. Yellow. Okay, so there we go. And so now I can draw another one, but this one from the low here to this, and then now we can see where that 100% level is. Right around like 1650. Yeah, 1670. So I think just like, and even just thinking about stock price, getting up to there, that's about a 15% move to the upside. So, I think RIVN's looking awesome. Yeah, because it kind of got like rejected here, pulled back, breakout, pull back to test like basically the highs over here, support over here in these levels. And yeah, I think it's going higher. I think it just looks awesome. And I was talking about a $15. Man, was I talking about a $15? Yeah. Why did I sell that? Because I'm learning. That's why. And because I'm learning, I need to manage risk. I took profits. I made like over $200 with this. So that's really good for me. I'm holding shares. So got to manage the risk. Contracts, a lot of them can and will expire worthless. This could be one of those. So don't get ahead of yourself, buddy. Gotta be sensible. It could say the $15 call. Big spike in volume over here, but lower premium. Big spike in volume, but higher premium. This is about 2 million. This one is about 1 million, as I had talked about. And so what we can see here, prices going up, premiums staying, it's not, well, this is the premium here going up, but the net call premium is not skyrocketing yet. So this is one I might want to just jump in on. I'm getting a little anxious here. But yeah, there's another contract here that stood out to me. Lots of volume here. This is 1.5 million traded on December 9th. And then this year is about 1.3 million, almost 1.3 million traded on the 13th. And following those trades, we actually don't know if it's increased or decreased, but it has generally been increasing from this spike that we saw, an increase of 4,000, almost 5,000 contracts. So I think that we're going to be seeing this going up. So I think this is the $17 call strike, and that expires September 19th of 2025. It's about 279 days before that expires. But let's look at some other RIVN contracts, just out of curiosity. We could look at the highest volume, but this premium here, it's, doesn't really stand out that much as being too crazy high. So let's sort that by premium, and we see this one. That's the one that I was just talking about. $17.50 strike expiring September 19th. So yeah, I feel like, I'm like really, this is tough because I want to be adding to Rivian, I want to be adding to Neo, and I want to be adding to Celsius and maybe GameStop. I can't be doing all of them. But yeah, I think this one looks excellent. And so, yeah, I'll have to see what it's doing pre-market, but I could see this being worth 250 in all honesty. And that, then just an 80% swing, that's making another $200. So I shouldn't have sold, but I need to manage the risk. FOMOing, yeah. It's DGen. You got to take it with a grain of salt because I'm an idiot. And so, what are rules meant to be broken? So, yeah, the data just makes this look really good. The chart just makes this look really good. So I think it looks really good. One, though, that does not look so good is going to be the TLRY $2 call expiring June 20th. We do got months before that expires, so I think that there is some hope. But as we can see in the price here in green, it has been low, going lower. Same with the premium. And I do have a pretty small position here. Looks like I have about 3 contracts I'm still holding. I did trim one at break even on Friday just because it's like we're putting in lower lows with the price and there's just not a lot of money behind it. Maximum premium traded here is less than 25,000. So that's like 2.5 DGen manatees nomin on the seagrass. It's like 2 of those manatees are intact, but one of them totally got hit by a motorboat. It's like half a manatee. Or, there are just 3 of them that, they got beat up a little bit. So they may not be that smart. But I guess they're in the whale family. No. This is little money here, so you're not following whales. But with that, we do see these spikes in volume. With that, we see the steady increase in open interest, a little bit of a pullback here. But generally, it's going up. This just doesn't seem too notable to me. And, I did have a buy order for 15 and 14. And, I think I got the, why it says 0 contracts here. It's because I bought one at 15 and then I sold one at break even at 17 cents, I guess. So that's just risk management in case this goes lower. Because if we do look at the chart, this it could be putting in a bottom. Could be a bottoming signal with the trading that we saw on Friday. But, I saw this coming down to like 142. That's when I started to build small position. Of course, I could be wrong. I am learning, so that's why it's a very slow process. And, we got this breakdown, bounced, pullback. And so I've just done this Fibonacci extension from, the high here that was hit on July 30th, coming down to the low during earnings. That was, it's like right after the open, it hit a low of 145, I believe, on October 10th, and then this bounce. So from that, that's how I get this extension and the 100% retracement. So that's just going to be like basically the same measurement, the same distance from the top here to the low here. I could just drag that from that high, and that matches up pretty perfectly with that 100%. I just did that approximate, so take the box with a grain of salt, but this 100% should be spot on there, and that's a low of $1.12. We hit a low on Friday of $1.15, so maybe some people are waiting for 112. They're going to be getting left behind. This does seem like pretty indecisive because there are big wicks to the upside and the downside. Opened at a price of 119 and closed at 119. So that's a perfect doji right there. Almost very symmetrical with the trading above and below. But it does look like there was more trading to the downside and that was met with buyers. We see an increase in the volume on this day. While it did go lower, that big wick does make me think that this could be putting in a bottom there at 115 and not getting to 112. But of course, if it does get to 112, $1 is right around the corner. So I wouldn't be too surprised by that. And so that's why I want to be lower in my risk with those contracts. At break even, it's super boring, but it's just getting more familiar. And there's really not that much data behind this because it's, a penny stock. And so there aren't going to be whales gambling on this when they could be doing something like RIVN, like NEO, or like Celsius, which there's just a lot more whale data there than there is with a stock like TLRY or Plug or, the other ones that I've talked about, ChargePoint, and so I think that there could be some hope with the bottom being in at 15, but if we go lower than 115, I think we're hitting 112 and possibly going down to 1. So for me, it's like I'm prepared for that to happen if it does. And I'll just take profits if it goes up, and then I'll be happy with it. Just kind of a nice trade. And this is a trade that it's like, I saw 142 when there was this breakout, retest, and bounce. Then, a lot of people, I think, were probably adding up here, see this big volume here. But then, it's just faded. And so I do think it's good, though, that we see volume being met by this open and close at the same price. That doji could be a bottom in there. But anyways, enough of that. Let's look over at unusual whales. And we can see that for TLRY, for this contract, the $2 call expiring June 20th, it's really, it's just scrolling down here, the total premium, it's like at most like 20,000. So it's nothing too crazy. That was probably this one. Total candle premium of 24,000. So nothing too crazy. We do see the stock price just fading down here. Nothing too crazy with calls or puts. Although, it does look like we have seen some buying of calls. But yeah, it's still just faded from there. So, and this is small money. And by small money, I mean you and me. I am not big money at all. I'm a little guy, super little, in all honesty. But I'm learning. First comes the learning, then comes the earning. And so right here, we got this is organized by highest volume. Since a lot of these are pretty low premium, there could be like thousands, like hundreds of thousands of contracts, tens of thousands, it looks like here with the data. At most, just thousands of these trade in. That doesn't really mean that much because they're very low premium. So low premium on the contracts. So if we look at and organize these by premium, we can see, again, it's like 40,000, 30,000. This is not huge money being traded on these. So I think this is a little bit of a gamble. So that's why, for me, at least personally, I am putting on the brakes with my buy. But I, evaluate if maybe we're putting in a bottom and it's settling out around 14. Then maybe I get one more contract. But I do plan to trim out of my position at these increments 10, 20, and 80%, which is not a huge amount of money. I'd be making like at most $50 on this. Not even $50. I'd be making like, that's 80%. My average is that. I'd be making like $20 to $30 on this. So yeah, it's nothing too crazy, but it's risky and I'm learning. And so the next one, based on, kind of popular demand from the comments, is Unity Software, ticker symbol U. This is the $30 call expiring June 20th. For me personally, I'd like to see a $45 call expiring June 20th because if we go over the charts, I do think that this is going to be hitting $45 a share. But, I think this is good to not chase, not to get too, aggressive about it because, we do see that this was in the fives. The lows, this was in the sixes, looking at the highs, over $6 per contract over here. And then it starts pulling back. And so maybe, I think that this is kind of like the scenario with RIVN. This is looking really good. Millions of dollars behind it, These pullbacks, good to be buying up. For me personally, going over like $200 or $2 a contract, that's getting a little too pricey for me, at least as far as at this stage of my trading of contracts, getting out of my comfort zone. I want to be in the comfort zone, not in the danger zone. The danger zone is where you lose money. The comfort zone is where you make boring amounts of money, but you're comfortable. And that's what this is all about. It's about being boring, in my view, taking profits along the way. And so I had taken some profits on a Unity call, not this one, but I identified the bottom, but I was not aggressive enough in getting in there. I got too soon. But anyways, looking at the volume here, see these nice spikes that correspond to the spike of, more than $1 million or less. Yeah, more than $1 million on both of those spikes. So looking good. Open interest been kind of flat and boring, but now it's increasing. And, implied volatility still, right now below 80%. So I think that, could be still, good time to buy. And if we do flip over to the chart, we can see this is a channel. I've covered this for probably about the past 6 months. And, really, tried to identify the bottom. I was hoping it would go a little bit lower. I have swung some shares, some calls, made a little bit of very, minuscule, in all honesty, amount of money with Unity. But this is also one that it's like, it's kind of like my baby. Like, I feel like I'm always talking about it before it starts trending, but I'm a small channel. So nobody listens to me. And then, I am, in managing my risk, I get out too soon. And so I had, $30 calls. Or no, I think I had $45 strike calls that expired in January. So, they're probably going to expire worthless. So it was good for me to manage that risk. But, I could see this pulling back to, from this retracement, got, $23, maybe that's a 50%, but it's probably right around the 382 right now. So let's just throw that up there. Yep, it's like spot on 382. So maybe it finds support there. And that does, let's see, looking at that cursor, correspond with some of the consolidation over here, the little bounce there. So maybe there's some support there. But if it does come down to 23, it's like, oh my God, I want to buy that. But I probably just can't be spreading myself too thin. And so this is probably one I'll just be a cheerleader. If it's going higher and people's faces are being ripped off, I'll be excited for them. And like I'll be like the proud parent clapping as my child rides the roller coaster. That's fine. There's other stuff like Neo. I'm super excited about that one. So, I'm cool. I, can't be spread so thin. That's how you lose money. If you're managing too many things, I got to be in and out of this one, all this stuff, especially if you're working a job, you can't be looking at the charts all day. And so this is one, I'm probably going to sit out. But, talking about 45, the reason for that is because we got, what I could see as being forming a massive inverse head and shoulders pattern, making our way over time, over the next 6 months or so, up to 45, but then we get rejected and then pull back to, this downtrend from the top of that channel. If I switch over to the weekly, maybe we could see that better if I don't zoom in too much. But yeah, look at that. That's the left shoulder forming the head here. And so, yeah, I don't know if that's probably the measurement, and I could, extend that down. But yeah, that'd be saying it's going up to like $75. And that would correspond with like the lows over here it's the lows of March 2022, right around 73.37. Let's see, what was the low? 73.12. So right around there. No exact prices. But yeah, but that's something that I feel like over the next couple years, this could be getting up to 75, or maybe the next year. Maybe I'm being too cautious, the 2-year time frame. But this is the weekly chart. I just think this looks excellent. I'm excited about it. I wish that I had more confidence in myself and my analysis, because I was talking about it right here, pulling back to that purple trend line, which, I had talked about this being an inverse head and shoulders pattern. It's pretty ugly, but, it is what it is. And pulling back to that, as well as the golden pocket from this retracement. So yeah, I mean, if we pulled back from this run up to like the 618, I don't think it's unreasonable to think that we could be pulling back to the 50% at 23. So yeah, I mean, for me, I should probably be disciplined in what that dip buy level is, but still $2. I think I'd probably want to up that to 250 if that goes lower. But yeah, I mean, this is not one that I can't be in love with any of these, but I do kind of love you. I do kind of love you. But, I'll be the proud parent clapping from the sidelines. That's another form of love. I don't have to be on top of you or in you. This is gross. I'm going to switch over to the data here in unusual whales. We can see the $30 call, June 20th expiration. Gone over the data already. Just, looking at it a little bit differently. So this is, the average fill. So this yellow line is going to be represented by this blue line. It's just, let's see, this is going back to November, but this date is going back to September. So this is just scrunched a little bit, but, this move up like that is, right here. And then we see the volume, the amount of volume going on there. That's going to be represented basically over the past month. So that's going to be a big spike here followed by a little spike, big spike here followed by a little spike, and then the little spikes here. That's right here. So it's the same data. I just extracted it from unusual whales. And yeah, so I don't really have too much to say about this one. There have been $1 million contracts bought on it, in premium. And following those, it's just been going up. So looking good there. Did sell apparently 3 contracts on Friday. First time it has been sold. 1, 2, 3, 4, 5, 6, 7. 7 count. I don't know if that's a thing really or if that's just superstition. Also, this being Friday the 13th. Red there. So maybe this is going to be seeing a little bit of a pullback. I could see that. And that makes me think that looking at the chart, it's come back to the 382, but I think that $23, that seems like might be coming to there. So I think good to be patient with this, but let's look at the other contracts here. Just typing in up U here to look at them. And we can see these are organized by highest volume. I'm going to reorganize them by highest premium. And this still, sub $1 million, rounding up to $1 million, of course. But I think that this could be pulling back. It doesn't scream out at me like RIVN does, like Neo does, and Marathon somewhat, but also Celsius. So those are some ones that I feel really confident in. I think could be pulling back some more, but pulling back from, the low of 360 to like 250, that's a nice dip buy. It's dip buying around here. I'd feel good about that. I'd feel more confident about that, especially 6 months before that expires. So that feels pretty good to me. But yeah, I am now going to flip over to the final one on here, which is the VIX, the Volatility Index, ticker symbol VIX. This is the $25 call expiring February 19th. And so I don't plan on trading this. I just kind of like to monitor it to see, is this being bought up? Is there some unusual activity around the VIX, which could suggest we might be seeing a pullback in the markets and a spike in the volatility. And so what we can see here is, over the past, getting back into, looks like the end of, the beginning of November, so past month and a half, we have seen not only the underlying price of the ETF coming down, which is in green there, or the average premium coming down in blue there. It's kind of flattened out a little bit. We have seen some spikes that have stood out to me, this one being above $1.5 million. That was a couple weeks ago, so I guess I would have mentioned it last week. That's probably why I kept it on the list here. We do see that open interest going up, so people are hedging with this, I would say. Not going too crazy with it, but this could be suggesting that we might be in for a little bit of a correction here in the next maybe 2 months or so. And if we look over at the chart, I do have this here. This is one, it's just kind of like hanging out around this trend line, whether it's above it or below it. It's, margin of error with trend lines and stuff. So, I mean, it's right around there. And that trend line, it actually goes back pretty far in time. I might have to do, nope, I don't have to do the weekly, but this goes back to the high from the, let's see, the beginning of 2022. And we have just been testing that and getting rejected from it. Then we broke out above it. And so hanging out around it, maybe we see some rip your face off rallies in the market and this starts to act as resistance again. But I feel like, we could be seeing a move to the upside. While I do not have VIX, I do have ticker symbol. Let's see if I can add it. Add symbol, UVIX. This is the 2x long VIX futures ETF. And so if I pull that one up, we can see this is actually, pretty interesting. I had noticed that there are these like 2-week down, up cycles. We kind of broke that cycle when we had a red week breaking down below this trend line that I have drawn here. And so the green cycle here, I was expecting it to come up to around 469, having fun with the number, but here this level being at 466. The up move was seen in the first portion of that week, and then we now have seen kind of a pullback. But we have effectively seen the end of this 2-week cycle. I got that locked. Why do I have that locked? It's approximate. And so, yeah, I mean, this is just really like consolidated down here. Is that a bear flag and this is going to break lower? I mean, I feel like that we're likely to see a bounce. And so I probably have it set to just take profits at 10%, which is not too exciting, which is around 450, I think, maybe 440. But yeah, I mean, I feel like this could be taken off the VIX, been consolidating here around that level. I think we could be seeing a nice spike. And to be honest, I think I'd be selling myself short, taking profits at 10% on the UVIX. But, I just got to manage risk because, maybe it goes up to 19% and then pulls back, as the more recent rally that we saw here was not as exciting as I had hoped. But maybe that's how they get you. They psych you out over here, and then they rip your face off over here when you're least expecting it. So, I mean, I think that we could be seeing some nice moves with this. But let's look over at the unusual whales data for VIX. This is that $25 call with the February 19th expiration. Yeah, we've seen this, some spikes in it. As I mentioned, I believe those were like $1 million spikes. This one's million. And yeah, so yeah, we can see it here. That's a premium of 17, almost 1.8 million. This is another spike. This is 3 million. Lots of noise here as this kind of fades down. So people going long and short, all sorts of stuff. But if we just type in VIX up here to see what the kind of general sentiment is, not thinking about the highest volume, I want to be looking at the highest premiums, sorting that by premium. And we can see $10 million. Oh my gosh. This is pretty interesting. That's a lot of money. So I'm going to add that here so I can just see what that looks like. It was a little decrease, but I think this is probably $10 million going long. That's also the same expiration that I'm looking at. So I'm looking at the $25 call. This is the $18 call. And then we have other ones that are, all of these that you can see here. Like if I remove myself for a second, you can see that all of these calls from the top here to the bottom are above, calls, puts, all these contracts, over $1 million traded on each one of them. From over 10 million to over 1 million down here. If I go one more, then, conveniently, then it gets below 1 million. So this window happens to be, this window, now that you can see me, this window happens to be framed perfectly for us to see all that. But yeah, I mean, some of them are calls, some of them are puts, but yeah, that $10 million one really stands out to me. If we look at just that contract over the past couple months, what can we see here? With that premium being low, we see a spike in $10 million. Looking back on that, that's a lot of money. And so we can see that $10 million day, what happened to premium following it, or sorry, what happened to open interest following that, it doubled, went from over 35,000 to over 70,000. And it's now 75, almost 76,000. We see another $10 million day. I think that's probably going to be over 100,000. I think this suggests we're going to be seeing a correction in the market. So, hold on to your butts. And, yeah, so I think that's just a good one to be monitoring. And so I'm excited about that. I am prepared for whatever kind of pullback we get. But, before I end this video, I'm going to come back to this, and I am just going to note here that I want to check in with Grok to go over what he thinks, or, just some of the data from the options activity. And so I am just going to go over to the DGen page. And so I'm just going to say, can you name the top 5 stocks that had the maximum amount of options premium traded? And so I might actually, just excuse me for a second, I'm going to take a screenshot of this so I can copy it as text. And so, oops, let's see, I'm opening that in preview. And now I should be able to copy that as text. And then I will go over to Grok over here, and I'm going to ask him anything. I'm just going to paste that. Can you name the top 5 stocks that had the maximum amount of options premium traded on December 13th? So I'm going to update that and see what Grok has to say about that. And so, a lot of these are probably not going to be too surprising. Intel, I did cover that. I did mention Palantir, so that does make sense that those would be up there. Some of them I'm not as familiar with. So this is just the top 5. And so one of them, NVIDIA, makes sense. Tesla makes sense. Intel, I'm Intel, so I am excited about that. I do have a very small position, a laughable position of Tesla. I'm never selling that, so it doesn't matter to me what happens with it. Palantir, I wish. Apollo Global Management, I don't know anything about this, but let's see what Grok has to say about these. So based on available information from web sources, the top 5 stocks that had the maximum amount of options premium traded on December 13th, 2024 are NVIDIA, known for its significant volume in options trading due to its leadership in the tech space, particularly with GPUs and AI innovations. NVIDIA has seen heightened volatility due to insider sales and market reactions. You also probably have heard about maybe a head and shoulders pattern being formed. So NVIDIA might be kind of topping around now. So good to be cautious with that one. Tesla is, ripping faces off, so just looking really good. So Tesla's options trading volume is consistently high due to its volatility, especially with upcoming events like vehicle delivery announcements and earnings releases. So, Tesla, good to be long Tesla and to not doubt Elon until, it gets overextended. It's not there yet. We just hit new all-time highs. Once we hit all-time highs in something, we tend to keep hitting them. So I wouldn't want to be shorting Tesla now. And then so Intel, which I'm excited about, this is saying that Intel stock has shown volatility following investment proposals and earnings announcements, which could spike options trading. So pretty exciting about that. I think the bottom is in for them. Palantir, with a growing interest from the private sector in its big data and AI solutions, Palantir has been experiencing significant options trading volume. Whether it's going to go higher, I don't know. Whether it's going to correct a little bit, I don't know. But I wish I was still in it, but it'd be a small position, so NBD no matter what. And so Apollo Global Management, ticker symbol APO. And so Grok is saying that after the news of a $5 billion investment proposal, Apollo's stock has shown increased volatility, leading to higher options trading activity. So that is one of interest. If you want me to cover APO, let me know in the comments down below. And so I should note that from Grok, please note that this list is derived from a single source's analysis for the specified date, and options trading volumes can be highly variable day to day. For the most current and accurate information, considering consider checking real-time trading data from financial platforms. So I think that's great. And, like I did over here, I am just going to follow up with how about the top 10? So that's a pretty easy thing to type there. How about the top 10? Type that in there and see what Grok has to say. Here is the list of the top 10 stocks with the maximum amount of options premium traded on December 13th based on available information. So we crossed off NVIDIA, Tesla, Intel, Palantir, and APO. Following that, we've got Apple, ticker symbol APLE. Sorry, ticker symbol AAPL, not spelling Apple. And then following that, advanced micro devices. I'll probably be doing a video on them tomorrow, maybe today, but I'm probably just going to cut this down into little clips for people. And so I might be doing a video on AMD tomorrow because it was requested. And, I think it went down about 2% on Friday. So that could be a great dip buying opportunity, as I think it will be going higher. Amazon, don't know too much about it. Super Microcomputer, SMCI. Don't know too much about it, but I think that it had recently formed a bottom and went on a rampage. So I don't know. Alibaba Group Holding Limited, or ticker symbol BABA. I'm super excited about that because it's a Chinese stock. Jack Ma is back in the spotlight. And, China is being more like business friendly. And I think that, the bottoms might be in for Chinese companies like Baba, like Baidu, like Neo. So I'm really excited about that. I think that we're going to be seeing some rip your face off rallies in the Chinese stocks. Maybe that will correspond with a little bit of a correction in the U.S. stocks and some volatility in the VIX picking up as the options data suggests. So yeah, I'm really excited about that. I will include these tickers in the list as well. Because, we asked Grok about them. And so, yeah, just coming back to here, and maybe I don't know if I can do this. I have a little, this, that should be, maybe it won't pop up in Excel, but I do have that as like my shortcut key, the X. So let's just see if I can get that. Apparently won't work here. And so what I could do is maybe just go over here, type in X. Actually, I don't know what I'm doing here. I'm just taking up time and trying to figure that out. But yeah, I'll just leave it like that. That is a note for me. But, as always, this is all just my thoughts, just my theses with options. Some of them are going to be good. Some of them are going to be bad. But if you did enjoy this, if you're getting value out of it, please make sure you subscribe to the channel for weekly videos on Saturdays on my options theses. This was the completion of week 7. I'm excited for week 8. I hope you are too. And, make sure you share this as well if you did find value in it. I appreciate you guys being here, and I'm enjoying learning about options. Thank you so much. Take care. I will release clips of this, and I will have timestamps, as I'm sure you guys already know. But yeah, take care, you guys. Cheers.